Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. So, I wish you guys are doing your preparation for the CMA inter examination in a very perfect manner. Everything is going on as planned and as expected. So, through a series of videos, I'm going to cover the content of the customs. So, Customs Act, we are going to discuss over a series of the videos. But before that, let me give you one caution. This customs related discussion, whatever we are going to have, this is relevant only for those students appearing for CMA inter examination. If you are a student appearing for CA inter examination, you have nothing to do with this lectures. You can simply ignore it. Why? Because this is not forming part of your syllabus. But if you are a student appearing for CMA inter examination, yes, then customs is also there as a part of your taxation paper. So that customs related discussion, not very large amount of discussion, very limited discussion. So the syllabus itself is very limited at the CMA inter level. That limited syllabus we are going to discuss over a series of videos. Okay, right. So these videos are going to be relevant only for CMA inter examination. CA inter students have nothing to do with this. So as you all are aware, as a part of our CMA inter, we have a taxation paper. Now, in that taxation paper, we will be learning direct taxes also. We will also be learning indirect taxes. DT also will be learning, IDT also will be learning. So DT constitutes 50% of the weightage. IDT also constitutes 50% of the weightage. And when it comes to indirect taxes, at the CMA inter level, we have two parts. One is GST and the other one is customs. So total IDT constitutes 50 marks. Out of that, GST constitutes 40 marks and customs is going to constitute for 10 marks. Customs is going to constitute how many marks? 10 marks. So that 10 marks related discussion has been pending that we are going to discuss as a part of this videos. Okay, right. So now what exactly we are going to learn in the customs. So guys, if you are all aware, if you have watched the GST and introduction chapter and all, we have seen that in India, we have two kind of taxation system, which is a direct taxation and we have indirect taxation. So under direct tax, we have something called income tax. And one of the major indirect taxation which is prevailing in India is GST. GST is the most prevalent indirect taxation system in India. See, prior to the GST regime, we call it as pre-GST regime. Earlier, we used to have so many indirect taxes. We used to have something called central excise. We used to have something called VAT. CST we used to have. Service tax we used to have. So like that, multiple indirect taxes used to be there. And along with that, customs duty also used to be there. Customs duty is also there even in the pre-GST regime. But what happened is once this GST has come into picture, the GST has subsumed most of the indirect taxes. So like this central excise is no longer there, VAT is no longer there, CST is no longer there, service tax is also no longer there. So this we all call it as all these taxes are subsumed into GST. What do we call it? All these taxes have become subsumed into GST, which means once GST has come into picture, these taxes has no role to play. But this Customs Act or customs duty, and broadly we call it as customs and FTP, we call it. So whatever this customs duty is there, before pre-GST regime, whatever customs duty is there, even after GST regime also, this customs duty is still there. So what do I mean by this is this customs duty is not subsumed. This customs duty is not subsumed into GST. This has not been absorbed by the GST. Customs duty is there even after GST regime also. So that customs duty, that customs act, a few provisions we are going to learn here. A few provisions. Once again, let me give you a caution here. See, customs is a very broader concept. In customs, we have in customs act, we have so many things to cover. Like the way we have learned in the GST, what is the charging section, what is a taxable event, how to value, what is the rate of taxes, how to calculate the amount of taxes, what do you mean by assessment, penalties, so like that. Like GST is a very huge topic, customs is also a very huge topic. But at the CMA inter level, we are not going to get a complete understanding of the customs. So you will not get such an comprehensive understanding as you got a comprehensive understanding of GST as a part of our lectures. That level of comprehensive understanding we are not going to have for customs. Why? Because that much volume of the syllabus is not there. So only we are going to get to know what is what in customs. So when customs will be levied, what is the taxability, how to do valuation, how to calculate the duty. So minimal provisions we are going to cover. Okay. And once again, if you look from the weightage perspective also, it is hardly 10 marks. It is constituting only for 10 marks. And the questions also will come from selected topics. And even if you open the CMA inter study material also, you will have somewhere around 68 pages. You have customs related content of amounting to 68 pages of content only will be there. And one more problem here at the CMA inter level is that they give a lot of things which we can't go deeper. They will try to introduce everything, but we will not be able to have complete understanding. Why? Because that things will make sense when we have an in-depth understanding. But that in-depth understanding of the customs is not required at the CMA inter level. But still, here and there, they will try to touch upon a few things which I can't go deeper and explain. Why? Because if I have to go deeper into that concepts, I have to go deep into the customs. If I go deep into the customs, that will take a lot of time, but that is not relevant for your examination. So our objective is to first clear the examination, that in-depth concepts we will learn at the CMA final level. Okay, so that caution I wanted to give here. So quickly we will try to cover the concepts of the customs. Will not take much of a time. So we will take like this material has also been prepared. So you will find some material. So whatever study material is there of the CMA Inter that we have presented here in an easily understandable format. We did not cut out any content. So we have somewhere around 30 pages of the material available here. This 30 pages, if we complete, 10 marks will be there with you. Okay. And hardly it will take some 5 to 6 hours. In the 5 to 6 hours, we will try to wind up entire customs part. That will be enough for your examination. Okay. So you need not have any second thought. So we will start learning now. Having said all this introductory things, we will try to go into the concepts of customs now. Shall we proceed ahead, everyone? Let us do it now. So since we got familiar with what and all we are going to cover, so let me now dig deeper into the concepts of customs. So first of all, let us try to understand when customs duty will be imposed. Guys, if you remember the discussion whatever we had in the GST, what is the taxable event under GST? When GST will be imposed? So we had a dedicated chapter where we have seen that the taxable event under GST is supply. Whenever supply takes place, either that could be supply of goods or supply of services, that is a triggering point. That is the taxable event. That is a triggering point which will cause the government to come and impose a GST on that supply. So the taxable event under GST is supply. Whenever supply of the goods takes place, whenever supply of the services takes place, it will trigger the government to come and impose a GST. Okay, sir, we understood GST will be imposed when supply is taking place, but when customs duty will be imposed? When customs duty will be imposed. So customs duty will be imposed whenever import and exports of the goods takes place. When customs duty will be imposed? In case of imports and exports of the goods. Basically, when we people of our country, when we engage in international transactions, when we engage in international transactions of the goods, then the customs duty will be imposed. So how a person in India, if I'm a person in India, how can I engage? What are the different manners? What are the different forms in which I can engage in the international transaction? Say, for example, I'm a person, I'm a manufacturer, or I'm a trader of some goods in India. So what I could do? So how I can engage in the international transaction is, number one, I can export. I can export my goods to other countries. Say, for example, I'm a manufacturer of electronic items. In India, I'm a manufacturer of electronic items. So I came to know that some another country, like for example, in Dubai, they need these electronic items. So what I have done is I have sold my goods to the customers who are there in Dubai. So what I have done there, I have done an export. See, first I'm trying to set the base for the entire customs in common language, in very simple language. Technical things will come back to that later. So first I'm setting the foundation for the entire customs. So I'm building up the basics. Okay, so please focus. I will keep as simple as I could. So this is one way where I can engage in the international transaction. I can export my goods to other countries. Or what else I can do is, say for example, I'm into manufacturing of electronic devices. Okay. For the purpose of manufacturing my electronic devices, I need some chips. Electronic chips I needed. So what I have decided is, let me try to import the chips from US. I need electronic chips for the purpose of manufacturing my electronic devices. For that purpose, I need the chips, and that chips I wanted to purchase from US. So I found one vendor who is there in the US, and I purchased that goods. I purchased that electronic chips for the purpose of my manufacturing of electronic devices. So this I call it as imports. I have imported the goods. So these are the two common forms for any person to engage in the international transaction. Either they will sell to the people outside of the country, or they will buy the goods from the persons outside of the country. Now what will happen is, whenever imports and exports are taking place, there the Customs Act has a role to play. There the Customs Act will have a role to play. There they will have a right to collect the customs duty on the imports and exports of the goods. Now, first of all, we will focus more on imports. We will focus more on imports. We will have very limited discussion on exports. Why? Because let me tell you one simple logic. See, it is unavoidable. Any country will have, from any country, they will have imports. They will import the goods from other countries. You take, for example, India. India is also not an exception. In India, there are various people who will import the goods, and there are various people who will export the goods. Tell me which one is favorable for the government, because of imports or because of exports. A country will get benefited. The country will get benefited because of exports. A country will always get benefited because of exports. If you are able to export the goods from your country to other country, it will add up to your foreign exchange reserves. But when a country is importing more, it will lead to fiscal deficit. It will lead to that foreign exchange deficit, and it will have a bad impact on the that currency of that country. So if a country is importing more than exporting, that will not be that favorable condition for that country. But what is encouraging for the country? If the country is doing more and more exports, then that will definitely become a very prosperous thing for that country. So that's why even what government also says is, on exports, generally duties are all exempted. Why? Because it will add up to the foreign exchange reserves of the country. But when you are importing, that is a discouraging thing for the government. They want to discourage the imports. Any country, if you take, they want to discourage the imports. They want to promote their exports, because that will strengthen their economy, that will strengthen their exchange rates, that will strengthen their local currency. So that's why even in the customs part also, whatever we are going to discuss, we are going to concentrate more on imports. We are going to concentrate more on imports. Why? Because on imports, customs duty is primarily levied. In most of the cases, customs duty on exports will not be collected except in a few certain circumstances. So we are going to concentrate more on the imports part of the international trade in customs. Exports, we are going to concentrate very less, very limited discussion we are going to have. So now let us come to imports. Sir, why there is a need for taxing imports? Why there is a need for importing customs duty? Why there is a need for importing customs duty in the country? So very simple, guys. Say for example, there is one manufacturer, or let me take for example, I'm an electronic device manufacturer. Okay. For the purpose of my manufacturing, I needed some chips. I needed some electronic chips, not the chips which you get. That electronic chips will be there. No, that chips I need for the purpose of manufacturing. Now these chips, whatever I need for the purpose of my business, I can procure them from India also. There are local manufacturers of electronic chips. There are some vendors who are in US also. These chips are getting manufactured in India. These chips are also getting manufactured in US. See, why we prefer foreign countries? Why we prefer imports? Why any person in India would like to import goods from another country? Number one, main reason, if it is not available in our country. If the goods are not available in our country, that could be one reason why a person can import that goods from the foreign countries. Another reason why any person will prefer imports is when they are cheaper. When they are cheaper in foreign countries. So now say for example, if chips are manufactured in India, I'm an electronic device manufacturer, I need chips for the purpose of my manufacturing. For that purpose, if I procure that chips in India, each chip is going to cost me 100 rupees. Each chip is going to cost me 100 rupees. But in US, if I am able to purchase the same chip in US, I can get it only at 60 rupees only. Because might be, since it is a developed country, there could be economies of scale which you might have learned in your economics and all. They might have some advantages because of their plant and machinery, because of their labor availability, whatever it is. The chip manufacturing cost in US is only 60. So if I procure a chip in local market, I have to pay 100 rupees for each chip. But if I purchase the same chip from US, I have to pay only 60. Now just imagine there is nothing called customs and just imagine for the time being now. So just create a scenario where there is nothing called customs duty, where you can import the goods without any payment of taxes. If that is the case, what will happen? So any person in India, if any person who needs that chips, what will happen is he will stop buying the goods from the Indian market. He will buy all the electronic chips from US only. He will buy all the electronic chips from US only. Any person will prefer, no, wherever he is able to get the product at a better pricing. As a prudent businessman, you will always prefer to choose that option only. So even myself as a businessman, if I have to purchase the chips, if I came to know that in India that chip is costing me 100 rupees, but if I could procure the same chip from US, I could get it only at 60 rupees. Why would I buy in our Indian market? what I will do, I will every person whoever is in need of these electronic chips, he will try to import that goods from US only. Now you tell me, if everybody starts importing that goods from US, what will happen to the Indian manufacturers? What will happen to the Indian manufacturers? They will not have any demand for them in their own country. And when there is no demand for that goods, what will happen to all these manufacturers? They will go bankrupt. They have to shut down the factories. They have to shut down their factories. If they are shutting down their factories, employment opportunities will come down. Employment opportunities will come down. So it will lead to unemployment in the country. If it is leading to unemployment, it will increase the poverty in our country. It will increase the poverty in the country. And because of that, wealth gap increases. So all these are affecting the economy. Yes or no? All these are affecting the economy. So if the people start preferring more imports than buying the local manufactured products, what will happen? This is how an economy is going to completely get shaken. So that's why what the government want to do, they want to make the Indian products also competitive. They don't want the people in India to prefer imports just because they are cheap. They want to make that imported goods also at a par with Indian products, so that Indian products can compete with the foreign products and the imports can be discouraged to some extent. Imports can be discouraged to some extent. So how can they make the Indian products competitive when compared with the foreign products? So what the government will do is, okay boss, let us do one thing. If you purchase the goods from US, how much you have to pay? 60 rupees. We will do one thing. We will impose something called customs duty. We will impose something called customs duty. So we will import customs duty at the rate of 40 rupees on each electronic chip. So now if you have to import the customs duty, if you have to buy the electronic chip from US, you have to pay for that product 60 rupees. And since you have imported, the government will come and impose on you something called customs duty. 40 rupees of customs duty they will impose. You have to pay this customs duty also. Now the net cost for the importer, that will also become 100. That will also become 100. So now if you pay close attention, in India, if you purchase a product, you are required to pay 100 rupees. If you are required to purchase a product from US, then also you are required to pay 100 rupees. Now both are at par. Both are at par. Now there is a fair ground for the Indian products to play. Now there is a fair competition. Now any person will not unnecessarily prefer the foreign product. He will also analyze which products are better. Whether in India he can procure or he can procure from the US. Now he will think. But if the price is less, if there is no concept called this customs duty, what will always happen? Any manufacturer will try to prefer importing from US only, but by imposing the customs duty, he will think, now if I buy the same product in India, then also it is costing me 100 rupees only. Why unnecessarily I have to import? Let me buy it from the Indian market only. And logistics issues and all can be avoided. Yes or no? So that has been the whole purpose of the customs, to make the Indian products competitive when compared with the foreign products, so that our country also can prosper. So if that competitive things are not maintained, if our Indian products are not made competitive with the foreign products, with the imported goods, I have already told you how and all it is going to affect our economy. How and all it is going to affect our economy. So that has been the ultimate purpose of customs duty. And this customs duty is oldest law, oldest taxation law. It is not something newly introduced after income tax, after this GST, after these other indirect taxes. Customs is there from ancient times as well. Customs, first and foremost kind of taxes which are levied in our country is customs. After the customs have been imposed, then these extra other taxes have come into picture. So customs is as old as history in India, not just in India, in all other countries. So the same kind of policies you will have in all other countries also. Like the way India is importing, in India is imposing customs duty and all, US also will have customs duty. If anybody from US is importing the goods in their respective country, US government also will impose customs duty. That's what the recent trade wars are all about. Recent, if you might have heard about it, Trump, this tariff rate, it is creating a lot of issues in the global economy. So Trump has declared the tariffs on India, on China also he has declared the tariffs, on many other countries and many other developed and developing nations he has started imposing tariffs. Sir, what are all the tariffs? Tariffs are all nothing but customs duties. Tariffs are all nothing but what? Customs duties. So Trump was very discouraging for imports in their respective US country. So what he has told, if anybody is importing any goods from India, 50% tariff will be there. That means that person in US, if he imports the goods from India, he has to pay higher taxes. So in order to encourage the local products in the US, there's a Trump has come up with this tariff rates and all, and which has created a lot of chaos in the global markets. So like that, customs is going to play a very crucial role for any economy to either prosper, to either break down the economy. So the crucial thing is this customs duty. Able to understand? So this is what regarding imports. So if we have a brief introduction regarding this customs and all. So if you pay close attention here, customs plays a crucial role in economy as it is a major source of revenue for country. One of the main sources of revenue for the country is customs. The terms customs comes from the word custom, which means a repeated practice or action in similar circumstance. So this word has been derived from some common phrase called custom. What do you mean by custom? A routine practice, a regular activity, repeated practice, we call it as custom. Custom tradition, we say, no, right? So collection of revenue through customs in India has existed since ancient times only. It is not something which is new now. It is being there since ancient times only. Modern taxation system, including customs, was introduced during British rule itself. It started in 13th century England under King John, and local sheriffs collected protection money for foreign traders, which later become state revenue. From the British Empire itself, these things are there. Then after that, other major forms of revenue like excise, income tax were introduced much later. The other indirect taxes or direct taxes are levied much later. But first and foremost kind of taxes which are levied are customs only. And the Sea Customs Act, various acts related to customs have been introduced, like something called Sea Customs Act was introduced in 1878. Then after that, something called Land Customs Act was introduced in 1924. Indian Aircraft Act has been introduced in 1934. And after independence, India continued with these British era laws until 1963, when the Customs Act 1962 was passed, repealing all previous enactments. That means until 1963, we are following the rules which are imposed on us by British government only, but our own customs law came into effect from 1963 by way of introduction of this Customs Act 1962. So this is what regarding brief history of the customs. Not that important from the examination. They will not ask you a descriptive question from here, but they might ask you some blanks, fill in the blanks, or MCQs they might ask. So that's why better you go through this once and remember the dates and all. Okay, clear and comfortable, everybody? Right. So now before we proceed further, let us try to understand what is the process. What is the process of customs? What is the process of imports? We will try to understand how the imports will happen. Say for example, we have Indian territory we have, no? Right. So Indian territory we have. Just give me 1 minute. Right. So this is the Indian territory, right? So this is all our India. Now, when I say imports, how imports can happen? Imports means what? From a foreign country, if you are buying the goods. From outside of India, if the goods are coming into India, that we call it as what? Imports. Okay. So now, the goods can come from another country into India through multiple ways. Through land, it might come. Say, for example, the goods are coming from here to here by way of a truck. The goods can come by way of land. Or the goods can come by way of air. How the goods can come? The goods can come by way of air. So I don't know how to draw an aircraft. So I assume this is an aircraft. The goods can come by way of air. Or even the goods can come by way of a vessel also. The goods can come by way of a vessel. So the goods can come by way of a vehicle. The goods can come by way of air. And the goods can come by way of vessel. And one of the most common way by which the goods will be traveled in the through international transactions is through water. Why? Because this is the cheapest. This is the cheapest. So water fare and all, if you are transporting the goods through water and all, so the fare will be small when compared with the other modes of transportation. So many cases, the goods are going to get imported or exported by using the waterways. But whatever it is, 3 modes are available. So the goods can come by way of air, the goods can come by way of water, the goods can come by way of vehicle also. By land also they can come. Now say for example, India wants to import some goods from US. There is one person in India, he wants to import some goods from US. Now say for example, that goods are coming in a vessel. There is one vessel. In that vessel, that entire goods are loaded and that goods are coming to India. Now say for example, this is all the coastal line, no? This is all the coastal line of India. Now through this coastal line from any place, coastal line is very bigger. Kilometers of coastal line we have in India. Now this person can bring that goods. So ship is coming, that ship can come to any coastal point and it can come inside the country. But what the government is saying is, if you are importing the goods, you have to pay customs duty. Sir, but just I'm saying one example of the water only, but the goods can come from many other ways. Now you all might get a doubt, sir, government is saying whenever goods are imported, you have to pay customs, but the coastal line is very, very bigger. How the government will be able to know when the goods are imported, who is importing the goods, what goods are getting imported, how the government will come to know? You can't expect the government to appoint the guards or this government officers throughout this coastal line. Throughout the coastal line, they can't appoint the guards. No, yes or no? So there need to be proper mechanism. Government needs to have proper procedure. They should implement some proper procedure where they can identify which goods are getting imported, when they are getting imported, who is importing them, and how much amount of tax has to be collected. They need to have one procedure. If they don't have proper procedure, what will happen? Like I have told, this person will bring a vessel containing all the goods. Some coastal line he will found where there are no guards, no monitoring and all. Through that, he will bring the goods into the country and he will start selling it. Then entire objective of the customs itself will be lost. So that's why government needs to have one proper structure. They need to say one proper structure. Okay, if someone has to import the goods or if someone has to export the goods, they have to follow one particular procedure. So what is that procedure? Let us try to understand it. So what is that procedure is, for the purpose of the customs, what the government has done is they have built some custom stations or custom ports also, you can say. So you can say either airports or this water ports, sea ports, ocean ports, whatever are there, those have been established. Say for example, since I'm talking from the waterways perspective, so at Mumbai, here they have kept one port. Okay, so now they have one another port here, they have some another port here, they have some 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 port here. So what the government will do is they will establish ports. That could be airport, that could be ocean port, whatever it is. So government will establish some ports. So, and what the government has told us, if you want to bring the goods into India, if you want to import the goods from outside of India to a place inside India, the goods must come through this ports only. The goods must come through this ports only. So wherever ports are there, so through that ports only you have to bring your vessel. So now they will establish the ports. Here they will appoint the government officers. They will have proper infrastructure. They will have some checking mechanism. So all the things they have set up. So if you want to import the goods into India, that importing should take place through these ports only. Now what will happen? Say for example, there is one person, he is importing the goods by way of a vessel, but he did not touch any of these ports. So what he has done is he found some place where there is no monitoring and all, as I have told, and he brought the ship here, unloaded all the goods into India, and he has started selling it. This is what we call it as smuggling. You might have often heard this term, smuggling, and smuggling has happened, smuggled goods. You might have often heard that. So what do you mean by smuggling? This is what the meaning of smuggling. If you are bringing the goods into the country other than by way of authorized custom ports or airports, by illegal means, if you are bringing the goods into India without paying the customs duty and all, that activities we call it as smuggling activities, which is a very bigger crime. If a person is caught doing the smuggling and all, he has to face so many consequences. He has to face imprisonment, penalties and all, hell a lot of consequences he has to face. So that's what the government has told. If you want to bring goods into India, we are establishing some airports or you are establishing some ocean ports and all. You have to bring the goods through that mechanism only. Now, say for example, there is one person. There's a person, Mr. A. Assume myself, I'm the manufacturer. So I wanted to import some chips. I wanted to import some computer chips for the purpose of manufacturing of electronic devices. So I asked a person from US, boss, you do one thing, you load all the goods in the vessel and you send it. I don't want to do smuggling. What I wanted to do, I wanted to get that goods through all the custom clearances. Now what will happen is this vessel has come. To this airport here. Say for example, this is a Vizag airport. At the Vizag airport, this vessel has come. Now here customs authorities will be there, custom officers will be there. Now what these custom officers will do is they will receive that ship will come to the custom station, then all that goods will be unloaded at the port, at the customs port. All the goods will be unloaded. Now what I am supposed to do is we have to go to that airport, you have to go to that customs port, and you have to go and say, sir, I am the owner of this goods. I am the person, I am the importer, I am the person who has imported the goods, I am the person who placed the order for the purpose of these goods, and you please hand over the goods to me. So I will go to this Vizag airport and I will say, sir, I am the owner of this goods. I am the importer who actually imported these goods from the US. So please give me my goods. So now you have to prove your identity. You have to prove it to that customs authorities that you are the true owner. You have to prove your title to that goods to the customs authorities. For that purpose, you will submit a document called bill of entry. What do we submit, guys? We submit something called a document called bill of entry. Bill of entry is something which is nothing but the document which proves that you are the actual importer, you are the person who is having the ownership of the goods. So you have to give to the government something called bill of entry. If you give to the government something called bill of entry, then the customs authorities will do the assessment. What the customs authorities will do? Customs authority will do assessment. What do you mean by assessment? Now they will determine, okay, what goods you are importing. So they will determine how much quantity of the goods you have imported, what is the value of the goods you have imported, that they will determine. Then they will determine what is the duty rate, what is the rate of customs duty. Say for example, you imported 1 crore worth of goods. So customs authorities will determine, okay, you have imported 1 lakh worth of goods. Now they will determine what is the rate of customs. Say for example, the goods, whatever you have imported, they attract the customs at the rate of 20%, customs duty at the rate of 20%. So 20 lakh rupees will be your customs duty. So now this customs authorities will do that assessment. They will determine, okay, 20 lakhs worth of customs duty you are required to pay. Now what you have to do is you have to make that payment of the customs duty. Whatever this 20 lakh rupees of assessment of customs duty has taken place, that 20 lakh rupees of customs duty you have to pay. And once you have paid that customs duty, then you can clear that goods from the customs port. From this customs station, you can clear that goods. Then now you can bring that goods inside the country and you can do whatever you want with that. When I say whatever you want with that, you can either use them for the purpose of manufacturing or you can use them for the purpose of trading, whatever it is. First clear your dues at the customs port, then they will give you clearance. Once you have got the clearance, then you can bring that goods into India and you can use it for your own purposes. So tell me, what is the entire customs procedure? First, the goods will if you want to import the goods, that goods have to come through customs port, either customs airport or customs ocean port or seaport. Then you have to show your identity. You have to go to the customs authority, show your identity that you are the true owner of that goods. You are actually importer, you are the true owner of the goods. How you can prove your identity? You can prove your title of the goods by submitting one document called bill of entry. Now, on the basis of that, customs authority will do the assessment. What do you mean by assessment? They will determine what kind of goods you are importing, what is the value of the goods, what is the quantity, and they will determine what is the rate of customs duty, and they will determine what is the amount of customs duty you are required to pay. You have to make the payment of that customs duty, then they will clear the goods. That we call it as clearance for home consumption. That we call it as what? Clearance for home consumption. See, some terms we have to become very, very familiar here. So what I'm trying to say, clearance for home consumption. So what and all terms I have used till now? Come on. What and all terms I have used? Number one, I have used something called custom station. Custom station. Then I have used something called bill of entry. I have used something called bill of entry. Now I am saying that clearance for home consumption. All these terms are very, very important, guys. So once you become familiar with all these terms, the further discussion looks very, very smooth. If you don't understand these basic terms, the discussion sounds very complicated. Clearance for home consumption, I have told you now. So what do you mean by clearance for home consumption? After making payment of all the customs duty, the customs authorities will release an order. Okay, you can clear that goods from the customs station. You can bring inside India. So that we call it as clearance for home consumption. Now, sometimes what will happen is, say for example, once again, the goods have come here. So you are a person. So once again, let me draw the diagram here. So you are a person, you have imported the goods, that goods came to port, that goods came to customs port. Now you don't want the goods immediately. So if you want the goods immediately, what you should do? You should go to the customs authorities, submit the bill of entry. Once you have submitted the bill of entry, they will do the assessment. They will determine what is the amount of customs duty you are required to pay. Once you pay that, they will clear it for home consumption. So what else you can do is, if you don't want the goods immediately, you can do something called, you can request the customs authorities to do the warehousing of that goods. To do the warehousing of goods. Sir, what do you mean by warehousing? That means you are telling to the customs authorities, sir, I don't want the goods now. Please keep it in the warehouse. Sir, which warehouse? Customs warehouse, we call it. What do you mean by customs warehouse? Customs warehouse means customs authorities will give license to some warehouse operators to operate as customs warehouse. So say for example, here we have some warehouse. So if you submit one application, so that we call it as bill of entry for warehousing. Into bill of entry also we say, you need not get into all that terminology. So as an importer, what you can say to the department, what you can say to the customs authorities is, sir, I don't want the clearance. I don't want to bring the goods inside country now only. So what I want to do is, whatever goods which are there at the customs station, please keep it at the warehouse. Which warehouse? Not this importers warehouse. There will be some places called customs warehouse. So I will request this customs authorities to move that goods to the customs warehouse by submitting one bill of entry for warehousing, not for clearance. For warehousing, I will submit one bill of entry, and what this customs authorities will do is they will move my goods and keep it in the customs warehouse. Keep it in customs warehouse. See, these customs warehouse are also under the control of the custom authorities only. These warehouses also will be under customs authorities only. Okay, your goods are kept in the customs warehouse. Sir, when the goods are getting moved from customs station to the custom warehouse, am I required to pay customs duty? No, you are not required to pay any customs duty. You are required to pay customs duty only when you are clearing for home consumption. When you are clearing the goods for home consumption, then only you are required to pay the customs duty. So here what is happening? So you are clearing the goods from the customs authorities for warehousing. That means you are not taking the control of the goods and you can use it for whatever purposes you want. Just you kept it at the warehouse of the customs. Now after a certain period of time, what will happen is now you will go to that customs warehouse. Then now you want it cleared for home consumption. Now what you should do is you should go to the customs warehouse, then submit the bill of entry for home consumption, clearance for home consumption. Now what will happen from the warehouse? Now if you when you go to the warehouse and submit an application for clearance for home consumption, at the warehouse they will do the assessment. Now when you are clearing for home consumption, then they will do the assessment, then they will determine what is the value, what is the quantity, what is the rate, what is the customs duty that they will determine, and that amount of customs duty you have to pay. After paying that customs duty, then your goods will be cleared for home consumption from the warehouse. Cleared for home consumption from the warehouse. So one point what I want to make here is you will be liable to pay the customs duty only when you are clearing that goods for home consumption. When I say home consumption, not for the purpose of your personal consumption. Home consumption means you are bringing within the India and you are using it for whatever purposes you want. That could be for manufacturing, that could be for trading, whatever it is. So that we call it as clearance for home consumption. So point which I want to make it very clear. As a dear student, you all have to note this point. You are liable to pay the import duty or customs duty only when the goods are cleared for home consumption. So what do you mean by this? I have introduced one more concept here. So once again, if I tell you summary, if you are a importer, importing the goods, you can do two things. You have two options. One is from the customs station, directly you can clear the goods for home consumption. Directly you can clear the goods for home consumption. Directly you can do it. Okay. Or else what you can do by submitting one bill of entry for home consumption. Or else if you don't want the goods immediately, what you can do? You can do warehousing. You can warehouse the goods at the customs warehouses. When you are making the warehouse, when you are causing the movement of the goods for warehousing, at that point of time, are you required to pay customs duty? No, you are not required to pay customs duty. You will execute something called bond. One bond you will execute, and under that bond, your goods will be moved from the customs station to the warehouse. And later, from the warehouse, what we will do? From the warehouse, you want to clear your goods for home consumption. So from the warehouse, when you are clearing for home consumption, then the customs duty you are required to pay. So if you are directly clearing for home consumption, you will pay, you submit a bill of entry and pay the customs duty. If you are warehousing first, for the purpose of warehousing, you are not required to pay any GST. But from the warehousing, when you are clearing for home consumption, then assessment will happen. Then the customs duty will be required to pay. Understood? Clear and comfortable, everybody? So one more term which we have understood here is warehousing. Warehousing of goods. Warehousing of goods. Understood? So four terms I have explained. One is customs station, then I have explained something called bill of entry, then I have explained something called clearance for home consumption, and also warehousing of the goods. Understood? Clear and comfortable, everyone? Now, going forward. Right. Exports. Now, if we talk about exports, similar, more or less the same thing will be there for exports also here. So what will happen is, if you are a person, if you want to export your goods outside of India, like in the manner of imports, in the exports also what we do is we go to the customs station. There we have to submit some documents. There we will go and hand over all the goods which we want to export and all. And after handing all the goods at the export for export at the customs authorities and all, that verification and all checks and all will happen. Here you have to generate one document called shipping bill. For imports, we are generating something called what? Bill of entry. But if you want to export the goods, more or less the same procedure. You have to take all the goods to the customs station. There all the checks and verifications will happen. They will determine what goods you are importing, what goods you are exporting, what quantity you are exporting, what value you are exporting. Generally on exports, you are not required to pay duties. but in exceptional cases, you will be required to pay some duty and all. So their customs authorities will determine all your assessment, what is the duty you are required to pay on the customs and all. On exports, generally you are not required to pay. Once again, I am saying, after all the clearances, you have to submit one document called shipping bill. Once you submit that shipping bill, now the goods will go from this customs station to outside of India, to the respective destination it will go. So this is what the procedure for exports. So tell me, what are the documents which are getting generated? For imports, we will generate a document called bill of entry. For exports, we will generate a document called shipping bill. And everything has to happen to a authorized custom station. Clear? Comfortable, everyone? So this is what a basic introduction. This is what the basic terminology underlying the customs concept. So with this understanding, we can go to the material and we can start reading it. Okay, right. So now with this background thing, let us start reading the material. So as we all are aware, some basic things are there here and there. So like if you see, any tax can be levied. In the GST introduction also we have seen, if a government has to levy tax, they can't do it unless that tax has been imposed under some law. And the constitution, in the constitution we have entry number 83. There we have seen three list 1 contains those matters on which the central government can impose the taxes. List 2 contains some matters on which a state government can impose the taxes, and we have list 3 where simultaneously central government and state government both can impose the taxes. So able to remember this? All we had an introduction this all discussion we had in the chapter introduction to GST. So similarly, if the government is imposing customs, in the constitution they should have power. So where that power is there for the government to impose that customs. So if you see here, entry number 83 of the list 1, so empowers union government to legislate and collect duties on imports and exports under section 12 of the Customs Act 1962, effective from 1st of February 1963. So there is entry number 83 in the list 1. So as a part of that entry in the constitution, the government has reserved the power. Which government? That to central government. So customs duty is something which is imposed and levied and collected by the central government. So central government, by way of entry number 83, list 1, they have reserved the power to collect the to import customs duties on imports as well as exports. Okay. Next, sir, what is the sources? See, all these remaining things, we'll come back to that later. What is the source of custom law? Basically, whatever provisions we are reading, that we are reading from 2 acts. When I say we are discussing the customs, that customs provisions have been taken from 2 acts. Sir, what are the 2 acts? One is Customs Act and the other one is Customs Tariff Act. So you can find it here. When I say we are reading customs related provisions, that customs related provisions are taken from 2 laws. Number 1 is Customs Act 1962 and the other one is Customs Tariff Act 1975. See, Customs Act talks about all the procedural formalities like what is import, what is export, what is the procedure, how to value, how to do assessment. So like that, all the procedural formalities, valuation related things, everything has been explained under Customs Act. But what does Customs Tariff Act deal about is, Customs Tariff Act talks about rates. What is the rate of customs duty? That will be determined by way of Customs Tariff Act. So if I put it in simple terms, Customs Act will talk about all the procedural formalities and valuation related things. But what is the rate? For example, if I'm importing electronic devices, what is the rate of customs duty? If I'm importing plastic related items, so what is the rate of customs duty? If I'm importing some machinery, what is the customs duty? If I'm importing some vehicle, what is the customs duty? Similarly, if I'm doing exports and all, if I'm exporting certain product on which customs duty will be imposed, what is the rate of the customs duty? That rate of the duties and all will be covered under Customs Tariff Act. So 2 acts we are going to learn. When I say we are reading custom provisions, we are actually reading the provisions of 2 acts. Number 1 is Customs Act 1962, which is going to talk about import and export duties imposed on import and export of the goods. Then what does Customs Tariff Act deal about? Customs Tariff Act deal about rates of customs duties which is levied on imports as well as exports. It talks about custom duties which are imposed on rate of duties which are imposed on imports and exports. In that also we have 2 schedules. The first schedule is talking about rates of the customs duty on imports, rate on imports, and second schedule talks about what will be the rate of duties on exports. So once again, if I put it here, in the Customs Tariff Act, we have 2 schedules. First schedule will talk about rate of duty on imports, and we have second schedule. Second schedule is going to talk about rate of duty on exports. So simply you remember, Tariff Act will talk about what is the rate of duty which you will be required to pay. So apart from these two acts, Customs Act 1962 and Customs Tariff Act 1975, we have so many rules and regulations also. Sir, what are that rules and regulations? Like if you see here, list of rules is also given here. We have something called Customs Valuation Rule, Determination of Value of Export Goods Rules 2007. Nothing but if you are making value, if you are making exports, how to determine the value of exports. Like in the GST chapter, like in the GST section, we have understood value of supply. No, there we have seen section number 15, how to determine value of supply. So like what is includable in the value of supply, what is not included in the value of supply, what is the treatment of discounts, pre-discount, post-supply discount, all the things we have covered, right? So like the way section 15 is talking about how to determine the valuation under GST, similarly we have some valuation rules. We have custom valuation rules for determining valuation of exports, and also we have custom valuation rules for determination of value of imports. If you are making exports, how to determine value of the exports? If you are making imports, how to determine the value of the imports? And along with that, we have something called baggage rules. See what is basically baggage. For example, if you are a person traveling, you will have your luggage. That luggage we call it as baggage. So on baggage also customs will become applicable. That is not there as a part of our CMA inter level. That will be discussed at the CMA final level. But we have something called baggage rules and re-export of imported goods. For that also, like we have duty drawback goods and all. So like that, we have various rules also there. Along with the two acts, we have various rules. But at the CMA inter level, we are only going to mainly concentrate on custom valuation rules, that to imports. Exports also, we are not going to concentrate much. At the CMA inter level, we are going to discuss how to determine the valuation, that too in the case of imports. That valuation rules we are going to focus more. Understood everyone? Right. Next. And one more thing, when the customs is getting imposed, the customs, the duty can be imposed either as specific duty, or it could be a ad valorem duty, or it could be a specific cum ad valorem. So this point also I will try to explain here. Customs duty can be imposed in three ways. Either it could be a specific duty, or it could be ad valorem. All these terms we need to be very specific here. Please try to understand. And the other one is specific cum ad valorem. Sir, what is this? First, I will explain what do you mean by ad valorem duty. Ad valorem duty means the customs duty will be determined on the basis of value. If I put it in simple terms, say for example, if you are doing imports, you made 1 CR amount of imports. So what is the value of the imports that will be determined? Say for example, it has come to 1 CR. Now on that, government will say on these items, whatever you are importing, 10% of customs duty will become applicable. Now how I will calculate that customs duty? 1 CR into rate of duty 10%, which will come to 10 lakh rupees. 10 lakh rupees will be my custom duty. This kind of imposition of customs duty, we call it as ad valorem basis. That means first you will determine value. On that value, you will multiply the applicable rate. Then you will get the duty figure. So that we call it as ad valorem. Then we have something called specific duty. The specific duty is something on the basis of quantity, you can say. So basically, if I put it, say for example, I'm importing a motor vehicle. I'm importing car. I'm importing a car from abroad. The government has told that for each car you are importing, you are required to pay 50,000 rupees of customs duty. It is not on the basis of value. They will say a specific amount. If you are importing car, for each quantity of the car, you are required to pay 50,000 rupees of customs duty, irrespective of its value. Or say, for example, I am importing some machinery. The government told if you are importing machinery, for each quantity of the machinery you are importing, you are required to pay 1 lakh rupees of customs duty. Here you need not determine what is the value of the goods you are importing or exporting. They will tell you a specific amount. On each quantity, this much a specific amount you are required to pay. That I call it as specific duty. What is ad valorem? You will determine value. That value will multiply a percentage. You will get a customs duty. And in some cases, the government can impose a customs duty on a specific cum ad valorem basis. That means sometimes government can say for example, I'm importing some machinery. Government says that on every machinery you are importing, you are required to pay 10,000 rupees of specific duty. Along with that, 5% of value also you are required to pay. Which means, say for example, I'm importing 1 lakh worth of machinery. The government is saying that on that machinery, 10,000 rupees of specific as well as 5% on the basis of value. So on this machinery, 10,000 rupees of specific duty I have to pay, and on that value I have to multiply 5% also. If I do that, the amount will come to 5,000. Total 15,000 rupees of duties I will be required to pay. This I call it as specific cum ad valorem duty. So when the government wants to impose customs duty, it can calculate, it can determine that customs duty amount in three different ways. Either that could be a specific duty, or that could be a ad valorem basis, or it could be a specific cum ad valorem basis. Clear? So this discussion also you have in the background of your at the back of your mind. Next, So this I have already told you, we have rules for valuation of imports, we have rules for valuation of exports also. But as I've told at the CMA inter level, we are going to focus mainly on how to determine the value for imports. Next, now let us come to the most important part, the most important discussion we are going to have now, levy of customs duty. First of all, Customs Act is applicable to what? What is the applicability of the Customs Act? They say that Customs Act 1962 extends to whole of India, including its territorial waters. What they have told? So, very similar thing we have read in the GST, more or less the same thing they will try to say. Customs Act 1962 will extend to whole of India, including its territorial waters. Including its territorial waters. Now we need to understand what is the meaning of India. What is the meaning of India? We need to understand. So once again, if I take the map here, if I take the structure here, so Customs Act extends to whole of India. Sir, what do you mean by whole of India? This entire landmass is there, no? This entire landmass. So this entire landmass will be called as India. All this will come under India definition. Okay. Not just that, they say that Customs Act will extend even to territorial waters. To what also it will extend? To the territorial waters also Customs Act will become applicable. Sir, now what is territorial waters? They say here from the coastal line. If you take coastal line, if you go up to 12 nautical miles, if you go up to 12 nautical miles, all that water we call it as territorial waters. More or less the same thing we have seen in GST. See, 1 nautical mile is equal to 1.852 kilometers. So from the coastal line, if you go up to 12 nautical miles, that I call it as territorial waters. So Customs India will become up, India will include this territorial waters. Even up to this 12 nautical miles also will fall under India definition only. Now, they have defined the term territorial waters. If you see, India includes territorial waters. Now, what is territorial waters? Territorial waters extends up to 12 nautical miles from the baseline, including any bays, gulf, harbors, creeks, creek means all small rivers and all tidal rivers, everything within that 12 nautical miles, that could be bay, that could be gulf, that could be harbor, that could be creek, tidal rivers, everything within that 12 nautical miles will come under territorial waters. And India has sovereignty over its territorial waters, and Customs Act applies here also. India has sovereignty. That means what? India will have supreme power in this nautical miles, in this up to 12 nautical miles, whatever that waters are there, on that supreme powers are there with India only. They can only decide what can happen in that 12 nautical miles. They can only make rules regarding that 12 nautical miles. In that territorial waters, India will have exclusive power to make the rules and regulations. And not just that, it includes both surface waters and seabed, subsoil, and airspace above it. So when I say territorial waters, it just doesn't include only the territorial waters. Below that seabed, whatever is there, below that whatever soil is there, that also will come under territorial waters. Not just the soil, above that whatever airspace is there, that also will come under territorial waters. Now I should have one definition here. I should have one diagram here. So like if you see, so if this is the baseline, so see here, if this is the baseline, if this is the coastal line, from this coastal line, if you go up to 12 nautical miles, so this is up to 12 nautical miles. If you go up to this 12 nautical miles, this will become territorial water. This is also forming part of India definition only. And when I say territorial waters, it just doesn't include this water. So below the soil is there, no? The seabed is there, no? The seabed subsoil is there, no? This also will come under India definition. And above that, whatever airspace is there, above that territorial waters, above that whatever airspace is there, this also will form part of India definition. Over this airspace also, who will have sovereignty, who will have supreme power to make the rules and regulations? India has. Okay. And not just that, if you read it further, so what they have told first, so they have told first India includes landmass and India also includes territorial waters. Not just that, India also includes something called exclusive economic zone and the continental shelf. Exclusive economic zone and also continental shelf will also form part of India definition. So what do you mean by exclusive economic zone? Nothing but the act says that from the baseline, if you go up to 200 nautical miles, how much? If you go up to 200 nautical miles. So from here, if you go up to 200 nautical miles, so till here also it is forming part of India only. On that also Indian government will have power. But up to 12 nautical miles, that we call it as territorial waters. From 12 nautical miles till 200 nautical miles, whatever water is there, that we call it as exclusive economic zone. What do we call it? Exclusive economic zone. Exclusive economic zone. And below that, whatever seabed is there, below that, whatever landmass is there, that we call it as continental shelf. That we call it as what? Continental shelf. That means even in this exclusive economic zone and on this continental shelf also, the government will have power. Sir, what power it will have? What generally will happen in this 200 nautical miles is you might have found oil rigs. You might have seen in the movies or YouTube videos and all, there will be something called oil rigs. So this kind of thing. So these oil rigs will be there, no? These oil rigs generally will be installed for the purpose of exploration of the oil and natural resources. Okay, so say for example, here someone wants to set a oil rig. Who will have the power to do that exploration of oil and all? India only will have the right to do the exploration of oil, exploration of natural resources in these exclusive economic zones also. This will exclusive economic zone in continental shelf. This also will form part of India. This also will form part of India. And not just that, in these exclusive economic zone and in this continental shelf, the government will have supreme power. India will have sovereignty. India will have supreme power. Sir, what power they will have? What they can do in that exclusive economic zone and in this continental shelf? What they can do? What powers Indian government will have in this exclusive economic zone and continental shelf? So if you come here in the exclusive economic zone and the continental shelf, what power India will have is in the exclusive economic zone, the union, that is the central government, the Indian government will have the right, sovereign right means supreme power for exploration, exploitation, conservation, management of natural resources, including energy production from tides, winds, and currents. Nothing but from here, within this exclusive economic zone, the government will have extreme power to do exploration of resources, natural resources, that could be wind, tides, and all. Nothing but they can generate electricity, they can explore the resources. The government will have supreme power. Exclusive rights for construction and operation of artificial islands, offshore terminals, and other structures. Once again, rigs, if they want to construct any island there, in that exclusive economic zone also, who will have power? The Indian government will have. Exclusive jurisdiction to regulate and control scientific research. In this exclusive economic zone and this continental, in this exclusive economic zone, the government will have the power to conduct scientific research also. And not just that, they will also have exclusive jurisdiction to preserve and protect the marine environment and control marine pollution. The Indian government will have exclusive power to control the pollution and anything other things there, and any other rights recognized by international law. So in the exclusive economic zone, in these waters, the government will have sovereign right to do exploration of resources, to construct any structures, to do scientific research, and also to control and prevent the pollution and any other things which can be recognized by international laws. And not just that, even in the continental shelf, below this water, whatever landmass is there, in that landmass also, the Indian government will have powers. What powers government will have in that continental shelf? The same powers: sovereign rights for exploration, exploitation, conservation, and management of all resources. They can construct any structure, artificial island, offshore terminal, and other structures. They will have jurisdiction to regulate and control scientific research. They will also have right to preserve and protect marine environment and control marine pollution. Basically, whatever powers are there in the exclusive economic zone, all that powers will be there even in the continental shelf also. Even in the continental shelf also, they will have that exclusive powers. Clear, everyone? Able to understand? So what will come in India definition? India will include all the landmass. These are territorial waters. When I say territorial waters, up to 12 nautical miles. Below that, whatever seabed is there, that is also India. Above that, whatever airspace is there, that is also India definition. Whereas if you go up to 200 nautical miles, that water, we call it as exclusive economic zone. And below that, whatever landmass is there, that will also become continental shelf. Here the government will have exclusive power to do the exploration of resources, construction of the structures, doing scientific research, and also controlling the pollution and all. For these purposes, these exclusive economic zone and this continental shelf also will become India definition. But if you pay close attention here, the airspace above EEZ, the airspace above exclusive economic zone and the airspace above continental shelf, that will not form part of India definition. That will be an international airspace. Only up to 12 nautical miles, whatever airspace is there, that only will form part of India definition. Above the exclusive economic zone, above the continental shelf, whatever airspace is there, that is not forming part of India. That is an international airspace. That is an international airspace. Clear, everybody? Able to understand? So this is what regarding India definition. Now, what is the significance of this definition is? What is the significance of this definition is? Here, there are a few more things which we need to understand. Say for example, here in 200 nautical miles. Up to here 200 nautical miles is there. Listen, very important point I'm trying to say here. Very, very important point and very, very interesting point also. Listen carefully. So till here, say for example, up to 1200 nautical miles, it will come here. So here what the government has done is, here they have installed one oil rig. Here what they have done, they have installed one oil rig. So just give me 1 minute. So they have installed this rig here. The government has installed the rig. Okay. So now here in this rig, what is happening is exploration, oil exploration has happened. Say for example, oil has been extracted and mineral oil, petroleum, crude, whatever it is that has been extracted. So now from here, oil has been extracted and from here it was taken to India. It was taken to the landmass. Can this be called as import? Can this be called as import? In the 200 nautical miles, they have installed one oil exploration rig, and in that rig, oil and gas has been produced. That gas which has been produced in this oil rig within the 200 nautical miles, that has brought to India. Can that be called as import? No, that will not be called as import. On that customs duty will not come, on that excise duty will come. Why? Because up to 200 nautical miles, these exclusive economic zones are also forming part of India definition. No? This will also form part of India definition only. So from this oil rig, if oil is going into the landmass, that will not be considered as import. That is not from any other country. Why? Because this oil rig also will be considered a part of India definition. So on that excise duty will come. Similarly, from India, say for example, here some repair has to take place. Here one spare part is required. From the landmass, someone has supplied that spare part to that oil rig. Can that be called as export? No, that will not be called as export. Why? Because this is also forming part of India definition only. This is also forming part of India definition. So if anything has been moved from here to the landmass, that will not be called as import. From the landmass, it has come to here. That will not be considered as export. Why? Because that is also forming part of India definition. Say for example, at this oil rig, one machinery was needed. One machinery was needed. That machinery was imported from US to this oil rig. That machinery was brought from US to this oil rig. Will this be called as import? Yes. On that, will customs duty will be there? Yes, customs duty will be there. From this oil rig, whatever oil that has been manufactured, that was taken outside of India. That was taken outside of India. Will that be considered as export? Yes, export. Will export duty will be there? Will customs duty will be there? If applicable, it will be there. If it is exempted, it will not be there. But whatever it is, from outside of from any other country, if something is coming to this EEZ or continental shelf, then that will be considered as imports and exports. But however, from this EEZ, if something is going to India and something is coming from there, that will not be considered as import and export. Clear? Able to understand? So this one thing you have to keep it in mind. Okay, and one more thing. This exclusive economic zone and continental shelf, they often call it as customs water. Indian customs waters, they call it. What do they call it? Indian customs water, they call it. So when they say Indian customs water, what do they mean by that? Exclusive economic zone and continental shelf, both put together, we call it as Indian customs water. So ignore all this, whatever other things are there in the diagram, you can ignore this. Just you have to remember what is the meaning of territorial waters, what is a exclusive economic zone, what is continental shelf. Okay, right. Okay, so all these things we have covered. So extension of Customs Act 1962 and Customs Tariff Act 1975. That means Customs Act 1962 and Customs Tariff Act 1975. It will also be applicable to designated areas in the continental shelf and in exclusive economic zone, and the whole of exclusive economic zone and continental shelf for prospecting for mineral oils in the continental shelf and EEZ, and supply of goods related to mineral oil or production. That means in these exclusive economic zones, in these continental shelf, if activities of oil exploration is happening, then whole of that EEZ and whole of the continental shelf will be considered as India definition, and for all of that, Customs Act will become applicable. If any other activity is performed apart from oil exploration, if other activities performed in exclusive economic zone or this continental shelf, if any other activities are performed here apart from oil exploration, then only some areas are designated, only to that designated areas the Customs Act will become applicable. So what do I mean by this is, once again, if I take the help of this, say for example, we have 200 nautical miles, up to 200 nautical miles. So within this 200 nautical miles, that means within the EEZ and within the continental shelf, if oil exploration is happening, for the purpose of oil exploration, entire exclusive economic zone and entire entire continental shelf, for entire EEZ and continental shelf, Customs Act will become applicable for the purpose of oil production or for providing any parts or something related to oil production. If any other activity is performed apart from this thing, If any other activity is performed, for those activities, there are some designated areas mentioned. In these 200 nautical miles, some designated areas are mentioned. For that designated areas only, Customs Act will become applicable. So you need not go into this much detail, just you simply remember Customs Act will even extend to exclusive economic zone and continental shelf. This summary you remember. Next. So what are the implications? These implications I have already told you. Goods bought from other countries to EEZ or continental shelf for mineral oil exploration activities are treated as imports under Customs Act 1962, subject to the duty. Additionally, mineral oils produced in EEZ or continental shelf are considered produced in India only, and they will be subjected to central excise duties under Central Excise Act 1944. That's what I have explained, right? So from this reg, if the things are going here or from here, so these transactions will not be considered as imports and exports. They are within India, on that customs duty will not come. In fact, excise duty will come there. Fine. So this is what regarding India definition and extent and applicability of Customs Act. Clear everyone? Right. So let us now proceed further with our discussion. So what and all we have discussed till now, if you have a quick recap of what and all we have discussed till now. So basically we have understood what is the meaning of India, the major component of the discussion, whatever we had in the previous session, that is all revolving around the applicability of the Customs Act and Custom Tariff Act. So I told you a few things like, so why customs duty has come into picture, like to make the Indian products competitive with the global products. This that was the main objective behind this introduction of the customs duty. And when I say we are reading customs duty, we are actually reading two laws. One is Customs Act 1962 and the other one is Customs Tariff Act. So Custom Tariff Act also we are discussing. So Customs Act will basically talk about all the procedural formalities like valuation, procedure for import, procedure for export. All the procedural formalities will be covered under Customs Act. Whereas what is the rate of duty which you are required to pay? So that will be mentioned by Customs Tariff Act. In that also two schedules will be there. One is first schedule, other one is second schedule. First schedule will talk about rates for imports and all, and the second schedule will talk about rates for exports and all. And as I've told, on imports, we are going to focus more. Why? Because on imports, the government wants to impose the duties. Whereas when it comes to exports, exports are a favorable thing for any economy. If the company is doing more exports, that means it is prospering more. Its foreign exchange reserves also will be very high. So government will never want to discourage the exports, but they want to discourage imports. So that's why there will be various kinds of customs duties on imports comparatively with exports. So generally on exports, there will not be any duties unless specified, but on imports, there will be a hell of a lot of customs duties. And apart from that, we have seen what is the meaning of the term India. So India includes all its land mass. Along with that, it also includes the territorial waters. What do you mean by territorial waters? Up to 12 nautical miles, we call it as territorial waters. Not just that, not just waters, that the seabed and subsoil below the territorial waters and airspace above the territorial waters also will form part of India definition. And it also contains exclusive economic zones and continental shelf. So what do you mean by exclusive economic zone? Up to 200 nautical miles from the coastal line, that we call it as exclusive economic zone. Below that, whatever landmass is that we call it as continental shelf. Even the Customs Act extends to exclusive economic zone and the continental shelf also. And also I have told you in the previous session, what are the powers of the Indian government with regard to the exclusive economic zone? What powers Indian government will have with regard to the continental shelf? That also we have covered. So this is what a brief summary of the things we have discussed in our previous session. Now let us proceed further. So now we will talk about the further sections. We will talk about now chargeability. So what is chargeability? Nothing but charging section. Like we have seen in the GST, what is a taxable event? What is a chargeable event? I told that in the case of GST, whenever an activity called supply takes place, whether that could be supply of goods or that could be supply of services, then GST will be triggered. GST will come into picture only when there is a taxable event called supply. Whereas what is a taxable event for customs duty? If for customs duty to become applicable, customs duty in fact will become applicable for either in case of import, either a transaction of import has taken place or a transaction of export has taken place. That too, whenever import of goods and export of goods is happening, then only customs duty will come into picture. So what is a taxable event under Customs Act? The taxable event is either export or import. So that's what they say here. That's what even charging section number 12 also says. Levy of customs duty. Duties of customs are levied on goods imported into or exported from India. So when customs will come into picture, either for that goods should have been imported into India or the goods should have been exported from India. Those are the taxable events. And at what rate? At the rate as specified under Customs Tariff Act 1975 or any other applicable law. So as I have told, Customs Act will say when customs will become applicable, whereas at what rate customs will be applicable, that rate has to be determined as per Customs Tariff Act 1975. And one more thing here, customs duty is levied on goods, not on the person importing or exporting them. See, as we all know, customs is an indirect tax. Customs will be imposed on goods, no matter whoever is importing. Say, for example, I am the person who is importing the goods. So whenever I import such goods, on that goods customs duties will be levied. Even on GST also, no, GST will be levied on goods and services. But if you take direct taxes like income tax is not a tax on goods or services. Income tax is a tax on the person making the income. Able to understand? So GST is also a tax on goods or services. Customs is a tax only on goods, not on the person importing or exporting. Whereas if you take the direct tax like income tax, that is a tax on a person, not a tax on a transaction. Basically, what they are trying to say here is customs duty is an indirect tax. That is what the meaning of this phrase. Next, the goods must be imported or to or exported from India. So once again, this also we have covered in the previous section number 12 only. For customs duty to get imposed, either the goods must have been imported or the goods must have been exported. And the rate of duty will be specified as per Customs Tariff Act 1975. So there is a Custom Tariff Act. In that Customs Tariff Act, the rates are specified. As per that rates, the customs duty will be collected. Now they are giving a few definitions here. Not all definitions are important from the examination perspective. Just we'll quickly give a glance. They try to define a few important terms here. Quickly, we will go through the definitions. So talking about goods, sir, what is included in the goods? So here they have given an inclusive definition. I have already explained in the GST what is an inclusive definition, what is an exhaustive definition I have covered. But in the customs, they have defined goods in an inclusive manner. What and all will be included in the goods? So if you see here, what and all will be included in the goods here? It includes vessels, it includes aircrafts and vehicles, stores, baggage, currency, negotiable instruments, or any other kind of movable property. Basically any kind of movable property, which includes vessels also, aircrafts also, vehicles also, stores also, even your baggage. As I've told, if you are carrying any baggage and all, baggage means the luggage of the people who are traveling. So all that will form part of goods definition. Next, sir, what do you mean by import? Import means bringing goods into India from a place outside India. So is there anything specific to know here? No. We all know it. What do you mean by import? From a place outside of India, you are bringing goods into India. That transaction, we call it as import. Sir, what is imported goods? Goods brought into India from a place outside India, excluding the goods cleared for home consumption. Sir, what they are trying to say here? So what they are trying to say here is, say for example, there is one person who is importing. There is one person in India. He's an importer. Okay, so he is bringing some goods from US. From US, say for example, the goods are coming in a vessel. So these goods were loaded in this vessel. Now these goods will come to this port. Say for example, at the Vizag port, he's getting them unloaded. So the goods till the time they stay at that customs station, or till the time they stay at that warehouse. I told you about warehousing of the goods and all also in the previous session. Till the point of time they are cleared for home consumption, they will be called as imported goods. They will be called as imported goods. But till at which point of time? Till the point of time they are cleared for home consumption. So at certain point of time, what will happen? This importer will file a bill of entry and he will clear that goods after making payment of the customs duties and all. He will clear that goods for home consumption. The moment the goods are cleared for home consumption, they no longer will be called as imported goods. They form part of normal goods. You can do whatever you want with that. Either you can resell them or you can use it for your manufacturing, whatever you want, you can do it. But we call these goods as imported goods only till the point of time they are cleared for home consumption. The moment they are cleared for home consumption, they will no longer be called as imported goods. Clear? So these definitions, once again, are not that important from the examination perspective, but since I have given in the material, so I'm explaining that to you. Next, after that, dutiable goods. Sir, what do you mean by dutiable goods? Goods which are chargeable to duty on which a duty has not been paid. So basically, you have imported some goods. On that imported goods, they are dutiable. That means on that customs duty is leviable. but on that goods it has not yet been paid. Whatever customs duty is there, it has not yet been paid. Those are dutiable, they are subjected to levy of the customs duty, but that duty has not yet been paid. Those goods we call them as dutiable goods. Next, sir, who is an importer? Importer includes any owner or any person holding themselves out as the importer, even if they are not the actual importer. Which means what? So what does that definition say? Say for example, once again, I will use the same example here. So there is one person, Mr. A is there. Now this person, Mr. A, he ordered for some goods from USA. There is one vessel. This vessel was loaded with all the goods and this has come to the Vizag airport. This has come to the Vizag, customs port it has come. Now these goods are not yet cleared for home consumption. These goods are not yet cleared for home consumption. So that means they are still lying with the custom authorities only. Before that clearance only, before that goods are cleared for home consumption, what this person, Mr. A, has done is he sold goods to Mr. B. So once again, I am telling the goods are sold even before clearance for home consumption. Say for example, this person is receiving the goods from US. Mr. B wants to buy this goods. He approached Mr. A. He told, boss, I want some 1 lakh quantity of the goods. Say for example, some 1 lakh quantity of electronic devices are coming. Now this person, Mr. B, went to Mr. A and told, I also want to buy 1 lakh quantity of that electronic goods. Now this person told, sir, the goods have not yet received. The goods are still at the customs authority. I did not clear them for home consumption. But I will do one thing. I will sell all that goods to you. I will sell all that goods to you. So say for example, he sold all that 1 lakh quantity of the goods for 1 CR. Now what this person will do is, now this person will go to that customs authorities and he will present himself as an importer. Who is actual importer? Mr. A is actual importer. But what he has done, he has sold that goods to Mr. B. Now what Mr. B will do is, he will present himself as an importer. He will submit the bill of entry proving his ownership of the goods and he will make the clearance of the goods for home consumption. So now even Mr. B also will be considered as importer only, even though Mr. A is the original importer. But since Mr. B is presenting himself as importer to the customs authorities for clearance of the goods for home consumption, even Mr. B also will be called as importer. So that's what they try to say here. It includes any owner or person holding themselves out as the importer, even if they are not actual importer. Now, what do you mean by export? So export, it is exactly going to be opposite definition of import. So what do you mean by export? They say that export means taking the goods out of India, to a place outside India. So from India, you are taking the goods to a place outside of India. So that we call it as exports. Next. Sir, what are exported goods? Goods which are to be taken out of India to a place outside India. Once again, same meaning. So that we call it as export goods. Now, who is an exporter? It includes the owner or any person holding themselves out as the exporter during the process of the export. Same like importer definition only. Next, garment goods. Sir, what if the government is doing import or export? The same provisions will become applicable. Say, for example, if I'm a normal person, I'm not a government, I'm some individual person, I'm some businessman in the country. If I'm importing some goods, government is saying I'm required to pay some GST. Sorry, I'm required to pay some customs duty. Sir, if the government is importing some goods, will they also be liable to pay the customs duty? Yes, the same provisions also will become applicable for the government also. But however, in some cases, customs duty will be exempted. But in normal terms, whatever normal provisions for custom duty are applicable for a common person, even if the government is also importing the goods or exporting the goods, whatever provisions are applicable for a normal person, all that provisions will be applicable even in the case of government goods also. So that's what they say. Provisions apply to goods belonging to government also. However, imports by Indian Navy, Police, Ministry of Defense, these are exempt from duty under specific notifications. Generally, all the provisions will become applicable. But however, if the government is importing goods which are relating to Indian Navy, which are relating to the police, which are relating to Ministry of Defense, these are all nothing but these are something to protect our country, right? These are all essential things for a government. So that's why if the government is importing these kinds of goods like the goods which are related, which are imported by Indian Navy, Police or Ministry of Defense, they will be exempted from duty. Next, sir, what is a taxable event in imports? So we already know it. Import commences when the goods cross the territorial waters and completes when they become part of the mass of the goods in India. For goods cleared for home consumption, the taxable event occurs when they reach customs barriers and the bill of entry is filed. So here there are few things which we need to understand. So once again, let us take for example, this is the coastal line. Now we all know in the coastal line up to 12 nautical miles. Up to what? Up to 12 nautical miles. we call it as territorial waters. So whatever waters are there here, these are all territorial waters, right? So these are all territorial waters. Now say for example, one vessel is there. I'm a person importing the goods. One vessel is there. The moment this vessel has entered, the moment this vessel has entered the territorial waters, import will commence. Import has started. So when import will commence, the moment the goods have entered territorial waters, import will commence. But will a person be liable to pay customs duty here only? No. See, import is commencing the moment the goods enter the territorial waters. But when import will be paid, when customs duty will be paid, so at the customs station, when bill of entry has been submitted and when the goods are cleared for home consumption, at that point of time you are required to pay the customs duty. At that point of time you are required to pay the customs duty. So import commences the moment the goods enter the territorial waters. The moment the goods have entered the territorial waters, import has commenced, import has started. But at this point of time, you are not required to pay customs duty. When you are required to pay customs duty, when they reach the customs authorities, when you are filing the bill of entry and clearing the goods for home consumption, at that point of time, you will be required to pay the customs duty. So here, this is the taxable event. This here, when you are clearing the goods for home consumption, then the taxable event will come into picture. But import, when it will commence, when the goods have entered the territorial waters. Clear? Next. So what is a taxable event in warehousing? See, warehousing I have already told you yesterday in the previous session. I have told, like, the moment once they have reached the customs authorities, once the goods have reached the customs authorities, like customs port it has reached, there will be two options available. As an importer, you can immediately clear the goods for home consumption and pay the customs duty. Or instead, what you can do is you can send that goods to the customs warehouse. So their warehousing will happen. After a certain period of time, what you will do, from that warehouse, you will submit a bill of entry, then clear the goods for home consumption. So here, when you are moving the goods from the customs authorities to the warehouse, to the customs warehouse, for the purpose of warehousing, at this point of time, you are not required to pay customs duty. No customs duty for warehousing. But from the customs warehouse, when you are submitting a bill of entry for clearance for home consumption, at that point of time, you will be required to pay the customs duty. If you are, without sending it to warehouse, if you are directly submitting a bill of entry for clearance for home consumption, you will be required to pay the customs duty. However, if you are not directly clearing for home consumption, first you are sending that goods to the customs warehouse. After that, you will submit a bill of entry and clear the goods for home consumption. Whenever you are actually, so one point you have to remember here, whenever you are submitting a bill of entry for clearance for home consumption, then the customs duty will be imposed. Then the customs duty will have to be paid. So that's what they say. Import occurs in case of warehousing. Import occurs when goods are cleared for home consumption from a warehouse. Now, what is a taxable event in exports? Export is complete when goods crosses the territorial waters. If goods sink in territorial waters, export is not completed. Nothing but exactly opposite definition of imports. So what did we say in imports? When import will commence, the import will commence when the goods reach the territorial waters. Then what about exports, sir? What exports, when exports will commence is, if you are a person, if you want to export the goods, what you will do is, you will hand over the goods to the customs authorities and you will submit something called shipping bill here. If you are an exporter, if you want to send the goods outside of India, you will submit all your goods with all the documents to the customs authorities and you will submit shipping bill. The moment you submit the shipping bill, export will start. Export will start. But export will come to an end. The export process will come to an end. So up to 12 nautical miles, we have this territorial waters, no? So the moment this vessel, for example, this vessel was loaded with all the goods which you want to export, the moment this vessel crosses the territorial waters, export has completed. Export is completed. Export has been completed. Sir, there is one vessel is there. This vessel has been loaded with the goods. I want to export the goods and all. I submitted a shipping bill. But what happened is, before they could cross the territorial waters, within the 12 nautical miles only, this vessel has sunk and all the goods have been gone inside the ocean. So now, is the export completed? No, export has not been completed here. Export did not complete here. So when I said export will get completed, export transaction will get completed only when the moment the goods have crossed the territorial waters. So import will commence when the goods enter the territorial waters. Export will complete when the goods cross the territorial waters. So if the vessel is sinking in the territorial waters, then there is no export has taken place. Okay, right. Next. So what is the objective of the act? So what is the objective of this Customs Act and and all? The act taxes goods that become part of the mass of the goods in India. If international goods are becoming a part of the goods of India, then this act wants to tax them. So what are rates and duties? I have already told the rate of duties of import. Import related duties are contained in the first schedule to the Customs Tariff Act, whereas export related duties are specified in the second schedule to the Customs Tariff Act. Understood. Apart from that, some other important definitions. Adjudicating authority. At various places, you might come across this term called adjudicating authority. Sir, who is that adjudicating authority? Authority competent to pass orders. Nothing but that authority, whoever is passing the orders or whoever is taking the decisions under this act. Under which act? Under Customs Act and Custom Tariff Act, excluding the board, council, commissioner appeals, and appellate tribunal. That means these three people will not come under adjudicating authority. Who will not come under adjudicating authority? The board, the commissioner appeals, and appellate tribunal. These people, even though they are taking decisions, even though they are passing orders, they will not form part of adjudicating authority. Apart from these three, if anybody else is having the power to pass orders or take decisions under this act, they all will get covered under adjudicating authority definition. Sir, what do you mean by assessment? So what do you mean by assessment? This also I have told you in the previous session itself. What do you mean by assessment? Assessment means nothing but determining your what is the amount of customs duty you are required to pay. What is the value? How much value you are? What is the value of import? What is the value of export? What is the rate of duty? What is the amount of customs duty? That determination has to happen. No, that process of determination we call it as assessment. So assessment means determination of dutiability of the goods, determining whether goods are dutiable or not. If they are dutiable, what is the amount of the duty? What is the amount of tax? What is the amount of cess? Or any other sum payable, including factors like tariff classification. What should be its classification? What should be its value? Whether it is exempted or not? Where, from which country? What is the origin of the goods? From where these goods are coming from? So all this determination, this process of determination, we are going to call it as assessment. This term is not new for us. We have already seen it in income tax and GST also. Next. Baggage. I've already told you luggage. So luggage of the person, whether it is accompanying the bag, whether it is accompanying the passenger, or even it includes unaccompanied baggage also. See, baggage can be accompanied or baggage can be unaccompanied. See, sometimes what will happen is you are a person, you are traveling in Indigo Airlines. Say for example, you are traveling from abroad to India. So along with you, you are also bringing one luggage. So you are also bringing one luggage. This luggage is coming along with you in the same flight. So this will come under baggage definition. Sometimes what will happen is because of the international connecting flights and all, luggage will reach before the passenger. Luggage will reach even before the passenger. That is unaccompanied baggage. That means luggage is not traveling along with the passenger. Either it is coming earlier or it is coming later. It is not simultaneously coming with the passenger. That we call it as unaccompanied baggage. That also will form part of baggage definition. Next. Beneficial owner. Sir, what do you mean by beneficial owner? Very common definition. Person on whose behalf goods are imported or exported, or who exercises effective control over the goods. Whoever is having the effective control, ultimate control over the goods, that person we call them as beneficial owner. Sir, what is bill of entry? Bill of entry is a document for customs clearance presented electronically for goods entering India. This I have already told. If you want to clear the goods in India, if you want to bring that goods in the Indian territory and Indian mass, you have to submit one document called bill of entry proving that you are the owner of the goods, and that document we call it as bill of entry. So what is bill of export? So I told shipping bill, we can also call it as shipping bill, or we can also call it as bill of export, whatever it is. It is a document for goods being exported. It also presented electronically in a prescribed format. Now, what do you mean by board? At various places they use the phrase board. So what do you mean by board? To which board they are referring to? So whenever they say board, they are referring to Central Board of Indirect Taxes and Customs, CBIC, which is established under Central Boards of Revenue Act 1963. So what do you mean by coastal goods? There is one more term called coastal goods. Sir, what is coastal goods? Say for example, we have here India. Okay, here we have Vizag. Here we have Chennai. So some goods are traveling from Vizag to Chennai in a vessel. In a vessel, some goods are traveling from Vizag to Chennai. Can we call this as imported goods? No. Why? Because they are not coming from outside of India. Within India, between two ports, if the movement is happening, those goods we call them as coastal goods. Those are not imported goods. Those are coastal goods. On that also will customs duty be levied? No, on that customs duty will not become applicable. Customs duty will be applicable only on imports. In case of coastal goods, they are not coming anywhere from outside of India. There is a movement within India only. So that we call them as coastal goods. On that customs duty will not become applicable. So that's what they say. Goods other than imported goods transported between two ports in India by a vessel. That we call them as customs goods. Sir, what do you mean by conveyance? Conveyance means a vehicle basically. It could be a vessel. If it is by way of water, what is the conveyance? Vessel. If it is by air, it will be aircraft. If it is by land, any kind of vehicle. So now what do you mean by vehicle? Somewhere they say what is the meaning of vehicle also. Is it there? Okay, not there. So vehicle means it could be anything. It could be a truck, it could be a bus, it could be any kind of thing. Next. Customs station. Sir, what is customs station? Any customs port or customs airport, international courier terminal in the airports which you find it, foreign post office or land customs station. These are all the places basically wherever this all custom clearances will happen. So all of them we call them as custom station, we call them collectively. Sir, you told customs airport. What is customs airport? An airport designated under section 7A to be a customs airport, including air freight station. Basically, the government will specify out of all the airports, they will specify which will be a custom airport. See, for example, in India, at small places, we have some airports. Their custom clearances and all will not happen. So their custom clearances will not happen. Why? Because that airport was not designated by the government. So government will identify out of all the airports, they will designate at which airport custom clearances should happen. Those are designated airports, we call them as customs airport. Next, customs area. What is customs area? The area within a customs station or a custom warehouse, including areas where goods and imported goods are kept before clearance. Basically, that custom airport, that warehouse, all that places collectively we call it as customs area. Then what do you mean by customs port? Basically, airport means customs airport means those airports which are designated. Customs port means they're talking about this naval ports and all. So a port which is designated under section 7 here to be a customs port, including inland container depots. Now, what is foreign going vessel or aircraft? The definition itself says not important. The term itself says the vessel which is leaving India to a place outside of India, that we call it as foreign going vessel or aircraft. So any vessel or aircraft engaged in carriage of goods or passengers between India and outside, including naval vessels, fishing vessels also will form part of foreign going vessels. Next, arrival manifest or import manifest. Sir, what is this? The manifest or report required for a vessel, aircraft or vehicle carrying imported goods to be delivered to the proper officer. So what does that mean is, see, I told if the goods have reached the customs port, if you want to clear them for home consumption, you are required to submit a document called bill of entry. Now, say for example, from a foreign country, a vessel is coming. This has come to one. This has come to one customs port. Now, these goods are required to be unloaded. These goods are required to be unloaded at that customs port. So, if the customs authorities have to permit you to unload the goods here, for that you have to submit something called import manifest. For that you have to submit something called import manifest. Basically, the in charge of the conveyance will do it. Whoever is the in charge of the conveyance. For this, a ship master will be there, no? So that master has to submit something called import manifest. Then only they will allow the unloading of the goods. If it is an aircraft, that pilot of the aircraft will be there, no? So he has to submit that import manifest. So only when that import manifest has been submitted, then only they will allow you to unload the goods there. Right. So the manifest or a report which is required for vessel, aircraft or vehicle which is carrying imported or exported goods to be delivered to proper officer. Who has to deliver that to the proper officer? Whoever is the person in charge of the conveyance. Sir, who will be that person in charge of the conveyance? Like a master of the vessel. If it is a ship, there will be a master. If it is an aircraft, commander or pilot in charge. If it is a train, conductor of a train. Or if it is any other conveyance, generally a driver. Next. Prohibited goods. Sir, what are prohibited goods? Goods whose import or export is prohibited under this act or any other law, except if conditions for import or export are met. Sometimes what the government will do is the government will completely ban. These goods should not be imported. These goods should not be exported. So that we call them as prohibited goods. Say for example, sometimes government says that if you have to import some goods, if you are importing some goods, you are required to fulfill some conditions. If you don't fulfill that conditions, import will not be permitted. Can we call that also as prohibited goods? No, those will not be called as prohibited goods. Why? Because if anybody can fulfill the conditions, they can happily import that goods. No, so those will not be called as prohibited. So unconditionally, without putting any conditions, if the government is saying so and so goods are prohibited for import or so and so goods are prohibited for export, without putting any conditions, they told unconditionally these goods should not be imported, these goods should not be exported. That we call them as prohibited goods. If they have attached some conditions, if you fulfill that conditions, then only export will be permitted. If you fulfill certain conditions, then only imports will be permitted. Those we can't call them as prohibited goods. Why? Because if you can fulfill the conditions, you can do the import and export. Next, stores. Sir, what do you mean by stores? Goods for use in a vessel or an aircraft, including fuel, spare parts, equipment, whether or not for immediate use. Basically, when you are traveling in a vessel, you need some spares, no? For that ship, sometimes some spares might be required. So they carry all that repairs, even fuel also they carry in the ship so that they can use it as a part of their conveyance. So all that things which are going to be used in a vessel or aircraft, including fuel, spare parts, equipment, whether or not for immediate use. Either you are immediately using it or you want to use it if any breakdown happens. So all that will form part of stores definition. Then we have something called transit, transshipment. We have something called transit of goods and transshipment of goods. This definition, this difference also we have to understand. So two terms here, transit and transshipment. Sir, what is the difference between the two? So we'll take a little time here and try to understand what is the difference between transit and transshipment. Then after that, we'll proceed further. Right. So what do you mean by this? Say for example, there is one vessel. There is one vessel. Okay. So this vessel is containing so many goods. So in this vessel, say for example, some 1 lakh quantity of goods are there. 1 lakh quantity of goods are there. So this vessel is coming from outside of India. Say for example, this vessel is coming from USA. Okay. So now it has come to the India. This vessel has reached India. So at Mumbai airport, this vessel has come. So at the Mumbai airport, what has happened is these 60,000, or let us take it for example, some 70,000 quantity was unloaded here. 70,000 quantity of the goods was unloaded at the Mumbai airport. Now remaining 30,000 quantity is there, no? That 30,000 quantity was not unloaded in the same conveyance. It has gone to some another country. The same conveyance, say for example, that has to go to Australia. So what this container has done is, it has come to Indian airport, Indian customs port. 70,000 quantity was unloaded. The balance 30,000 quantity in the same conveyance. The balance 30,000 quantity, the balance is same 30,000 quantity. The balance 30,000 quantity in the same conveyance, it has gone to Australia. This we call it as transit. So now you tell me, on this 30,000 quantity of the goods also, will customs duty be liable? No, customs duty will not be liable. But this we call it as transit. So what is transit? In the same conveyance, they have gone to some another country. After touching the Indian area, it has gone to, in the same conveyance, it has gone to another country. So this we call it as transit. Let me give you one more example. Now we'll try to understand transshipment. Once again, let us extend the same example. So there is a vessel. So in that vessel, 10,000 quantity or 1 lakh quantity of the goods are there. So now what happened is, out of this 1 lakh quantity, as I have told, 70,000 quantity was unloaded at the Mumbai airport. And the balance 30,000 quantity, the same vessel, it has gone to another country, Australia. So what do we call this? This we call it as transit. On the transit also, are you required to pay customs? No. Now 70,000 quantity was unloaded here. No. Out of that 70,000 quantity, some 30,000 quantity, has to go to Nepal. It was not meant here. It has to go to Nepal. So now what they have done is, out of that 70,000 quantity, so that 30,000 quantity, which was not meant here, which was meant to do Nepal. Not Nepal. Nepal is not having a coastal line, no. So let us do one thing. Okay, so that 30,000 was meant to do some another country. So what they have done is, so in another conveyance, not in the same conveyance, here conveyance has changed. Some another vessel is there. In that vessel, they have loaded this 30,000 quantity. They have sent it to another country. So this we call it as transshipment. So what is the difference between transit and transshipment? Transit, in the same vehicle, it will go to another place. But in the case of transshipment, what is happening? The conveyance is changing. Or let me give you one example. Okay. Out of the 70,000 quantity, 30,000 was loaded in another ship and it was sent to another country. On that, you will be required to pay customs duty? No. Why? Because it was meant for another country. Balance, how much quantity is there? 40,000. Out of that, 20,000 quantity was not meant for Mumbai. It has to go to Chennai. So now what they have done is, they have taken one more conveyance. They have taken one more vessel. In that 20,000 quantity, they have loaded, and this vessel will go from Mumbai to Chennai. This we also call it as a transshipment. So now you tell me, when this vessel containing 20,000 has left from Mumbai to Chennai, on that, are you required to pay customs duty? No. On this also, you are not required to pay customs duty. But from Chennai, they will be cleared for home consumption, no? A bill of entry will be submitted and it will be cleared for home consumption, right? So at the Chennai port, when the bill of entry was submitted and when these goods are cleared for home consumption, at this point of time, customs duty will become payable. Clear? So we got to know what is the meaning of transit. We got to know what is the meaning of transshipment. Very simple, guys. If the goods are not meant at that place and they are going to some another place in the same conveyance, that we call it as transit. If the conveyance itself is changing, then we call it as transshipment. So basically, whether it could be transit, whether it could be transshipment, customs duty will be payable only when the goods are cleared for home consumption. Whenever you are submitting the bill of entry and when you are clearing the goods for home consumption, then only you are required to pay customs duty. So as long as you are not clearing the goods for home consumption, you will not be liable to pay the customs duty. Understood? So that is what we have tried to explain it here. So we'll be able to find here the meaning of what is a transshipment, what is a transit. This I have tried to explain with the help of one example. Clear? Comfortable till here? Right. So proceeding further with the subsequent discussion. So now we'll try to understand section number 19, which is talking about determination of duty in case if multiple articles with different rates are imported. See, this is somewhat similar to the concept of mixed supply and composite supply, which we have understood in GST. So something similar to that, very similar to that. Say for example, there is one importer. Okay, so now this importer has imported some 5 products. Product A, B, C, D, E. 5 products he has imported. So, and each product, each article, whatever he has imported, each article is having different rates of customs duty. Article A will attract 10% of customs duty. Article B will attract 15%. Article C will attract 5% only. Article D will attract 20%, and Article E will attract 30%. So different articles he has imported. Now, say for example, all these 5 articles, whatever he has imported, the total value is at 10 lakh rupees. How much? The total 5 articles, whatever he has imported, the total value for that is 10 lakh rupees. Now what has to be done? So now this on this entire 10 lakh rupees, at what rate customs duty will be levied? See, here we have to check is separate value for each item is available. The total value is at 10 lakh rupees, but is it able, can we find out, if you are able to find out, see, even breakup is also available. Say for example, whatever duty he has, whatever products he has imported, out of that, A constitutes some 2 lakh rupees, B constitutes some 1 lakh rupees, C constitutes some another 2 lakh rupees, D is 3 lakh rupees, and E is 2 lakh rupees. So we have a proper breakup of that 10 of that all the 5 articles. So if we have a proper breakup, what we will do? So for this 2 lakh rupees worth of product A, we will impose 10% of customs duty, which will come to 20,000. On this 1 lakh rupees, 15%, which will come to 15,000. On this 2 lakh rupees, 5%, if you calculate, which will come to 10,000. On this 3 lakh rupees, 20%, which you calculate, it will come to 60,000 rupees. And on that 2 lakh rupees, 30%, once again, if you calculate, it will once again come to 60,000. The total you have to calculate it here: 60, 60, 120, 130, 150, 165. 1,65,000 rupees of customs duty will be payable when you are able to determine the value of each and every article. But say one example, but let us say an example, you have purchased some, you have imported total 10 lakhs worth of goods, but what is the individual value of each article? You are not able to find it out. What is the individual article of each, what is the individual value of each article? You are not able to find it out. Then what has to happen? Then what has to happen is, whatever rule they have told in the mixed supply, the same rule they have told it here. In case if you are not able to bifurcate the value, you have to impose customs duty at the highest rate. Among all this, whatever highest rate is applicable, that rate you have to multiply. So highest rate is 30%. If you are not able to determine on the entire 10 lakh rupees of value, 30% if you multiply, which will come to 3 lakh rupees. Now this importer will be liable to pay 3 lakh rupees of customs duty. Clear? Able to understand everybody? Right? Right. So that's what they say here. Now sometimes what will happen is, say for example, you are importing 5 articles, A, B, C, D, E. So 5 articles you are importing. I told, if you remember in the introductory session, I have told import duty can be either a specific duty or it could be a ad valorem duty. So here whatever we have calculated, this case is a ad valorem duty, where you are determining the customs duty on the basis of value. But sometimes what will happen is the duty will be imposed, which is a specific duty. That means they will say for each product, if you are importing one article, one quantity of article A, on every article 500 rupees of excess duty you are required to pay, 500 rupees of customs duty you are required to pay. So here, say for example, these are 5 products are subjected to specific duty. We can also call it as quantity based duties. Specific duty also you can say, even you can say quantity based duties. So say for example, that specific duty is for product A, for each quantity imported 500 rupees. For product B, for each quantity imported 200 rupees. For product C, each quantity imported 100. For product D, each quantity imported is 200. For product E, each quantity you have to pay 50 rupees of customs duty. If that is the case, if the duty is on the basis of quantity, then you will know quantity. Then you are not determining it on the basis of value. You know the quantity, right? If you are importing. So here you need not pay any attention to the value. You can determine quantity, say for example, some 100 quantity of product A, 500 quantity of product B, 700 quantity of product C, 50 quantity of product D, and 1000 quantity of product E is getting imported. You can find out the quantity. Now it becomes very easy to determine. So what you have to do is you have to multiply each quantity with the amount of duty for each quantity. So you will get the total figure, that much amount of customs duty you are required to pay. See, this problem will come only when the duty is on ad valorem basis. If it is a specific duty on the basis of quantity, you can determine the quantity and accordingly you can determine that amount of duty. Understood? Say for example, you are importing some goods. Once again, A, B, C, D, E. 5 products you are importing. Product A will attract 10%. Product B will attract 15%. Product C, nil, 0. Import duty is exempted on that. Nil rated exempt customs duty. Then product D, we have 20% of customs duty. Product E, we have some 15% of customs duty. Guys, sorry, at various places I was using excise duty instead of customs duty. So sorry for that. So, but please understand my intention. The objective has been to mention the term customs duty. Okay. So 5 products are getting imported. On that, one of the product on which the customs duty is nil, 0. So then what about it? Here also total 10 lakhs worth of products have been imported and the duty is also ad valorem. Now what will happen? Now also same rule will apply. Whatever highest rate is there. What is the highest rate here? 20%. So on this entire 10 lakh rupees, 20% will be applied. The customs duty will come to 2 lakh rupees. This much amount is liable to be paid. Understood? So that is what section number 19 says. Duty on goods containing articles with different rates is determined based on following. If articles are liable to duty on the basis of quantity, it will be charged on the basis of quantity. This is what I have told about specific duty. If it is a specific duty, it will be charged on the basis of quantity. No confusion here. If articles are liable to duty on the basis of value, if it is the ad valorem duty, if all the articles are having same rate, say for example, if you are importing 5 articles, all the 5 articles are having a same rate, every article is liable for customs duty at the rate of 10%, then there is no confusion only, then at that one single rate, you will multiply with the value. So in case if different rates are there, then it will be charged at the highest rate. If articles are not liable to duty, say for example, if some of the articles are not liable to duty at all, then also same logic will apply. Out of the entire value, highest rate we will determine, and 20%, in our example here 20%, that 20% will multiply the resultant customs duty the person is liable to pay. Understood? So this is what section number 19 says. Apart from that, few other clarifications have also been given. Accessories and spares. Say for example, I'm importing some plant and machinery. This plant and machinery will attract total, this plant and machinery is costing me 10 lakh rupees. And this plant and machinery will attract 30% of the customs. Along with that plant and machinery, I'm importing some important spare part also. Essential spare part of that machine also I'm importing. Say for example, for that value, that spare part value is 2 lakh rupees. But this 2 lakh rupees separately, if you are importing, that will attract 40% of customs duty. But since I am importing this spare part, which is an essential component of this plant and machinery, even this 2 lakh rupees also will attract GST at the rate of 30%. Sorry, customs duty at the rate of 30% only, not 40%. Not 40%. So that's what they say here. If you see, accessories, spare parts, or maintenance tools for any article are charged the same duty as a main article. Example, if a machine is charged at 30%, its repair implements will also be charged at 30% only. Able to understand? Next. Evidence for duty calculation. Say for example, if you have some other proof, say for example, customs officer is saying your product will attract 30% of customs duty. But if you are able to submit some evidence to the custom officer saying that, sir, actually the products which I have imported, that will not attract 30%, sir. The products will attract only 20% of the customs duty, sir. If you have evidence, if you can convince that customs officer, he will do the reassessment and determine the amount of customs duty. That's what they say. The importer may provide evidence regarding the value of an article to the proper officer for accurate duty calculation. Then section number 20 will talk about re-importation of goods which are exported. Re-importation of goods which are getting exported, which means, say for example, there is one person, Mr. A. There is a person, Mr. A. This person has manufactured some, what will say on my table, what example I have. Say for example, this person has exported some goods. He's a manufacturer and he exported some electronic devices, keyboards. in front of me. I'm able to see the keyboard. That's why I'm using. So he exported some keyboards to the US. Now there is another person, Mr. B. Now there is another person, Mr. B. Now what this person has done is whatever goods which were exported by Mr. A, the same goods he has imported once again from US vendor. He has imported the same goods here. It is not sales return, guys. It is a re-importation of exported goods. Whatever goods that have been exported previously, those are getting re-imported into the country once again. Now, for these re-importation of exported goods, will there be any special rules for determination of customs duty, or they will be treated as normal imports and normal provisions only will become applicable? So the section clarifies that even in the case of re-importation of exported goods also, the same provisions, they will be assessed to customs duty as in the case of normal imports only. No special provisions, nothing will become applicable here. So that's what they have clarified. Goods imported into India after being exported are liable to duty and subject to the same conditions as similar goods imported for the first time. No special provisions, nothing. Then we have a few new terms here. Some new terminology, you will be able to find it here. Something called derelict, wreck, jetsam, and flotsam. So 4 things they are using here. What do you mean by that? Derelict, wreck, jetsam, flotsam. Sir, what do you mean by this? What are the meaning of these terms? These terms are something sounding like Latin and French for us. What is the meaning of this term exactly? So first of all, what do you mean by derelict? Derelict means abandoned property in the ocean. Abandoned property in the ocean. Say for example, there is one vessel. There is one vessel in the water. So in that vessel, some goods are there. Some property is there. And this property, either the vessel altogether or the property on or the goods in the vessel, they have been abandoned. They have been left out in the sea only. They have been left out in the sea without any hope of recovery. They have just like that left it out. Whatever maybe the reason, doesn't matter. Some abandoned property in the ocean, that we call it as derelict. That could be altogether a vessel, that could be goods on the vessel, doesn't matter. That abandoned property without any hope of recovery, that we call it as derelict. Next, then what do you mean by wreck? Wreck means property cast ashore after shipwreck. Say for example, some ship is there. This ship has been damaged because of some reason. It might have hit with something or whatever may be the reason. Some ship has been damaged, and this has floated. What do they say? It has cast ashore after shipwreck. Some ship damage has taken place, and from that some property has flown to the shore. That we call it as wreck. Then we have something called jetsam, goods thrown overboard to lighten the ship. So sometimes what will happen is when the wind is not favorable, ship will not move. So in order to have the smooth movement, what they will do is these vessel operators and all, they throw the goods into the ship to lighten the ship. They throw the goods from the ship into the ocean to lighten the ship in order to facilitate the further movement. That thrown goods from the vessel to lighten the ship, that we call it as jetsam. And flotsam, goods which are separated from the ship by some calamity, some peril. Peril means some calamity or something has taken place. Because of that, some goods have fallen into the ocean. That we call it as flotsam. So derelict. So these terms you have to understand. Derelict, which means what? Abandoned property in the ocean. Wreck, property cast ashore after shipwreck. Jetsam, goods thrown overboard to lighten the ship. And flotsam, goods which are separated from the ship by some peril, by some calamity. Now say for example, so what they are trying to say here is, let me take an example of that jetsam only. Okay. So now say for example, there is one vessel. This vessel is facing some huge trouble. Heavy wind is there. So there is a risk of this ship getting sunk. So what this person in charge of the vessel has done is, he has thrown one container containing the goods. He has thrown some container in the ocean in order to lighten the ship. Now this thing, whatever he has thrown into the ocean, now after a certain point of time, he wants to bring that into India. Inside the India, he wants to bring it. Say for example, this container has flown to the shore. Now he wants to bring that inside that. India, and he wants to use it. Now what they are trying is, even on these derelict, shipwreck, or jetsam or flotsam, if these goods you are bringing into India, they will also be subjected to the same kind of customs duty. See, if that doesn't happen, what will happen, So people are very smart here when committing the frauds. Intentionally, they will throw some goods into the ocean, and when they float to the shore, now they bring it without paying any customs duty. So that's why what the government has told, it's even if it is a derelict, wreck, jetsam or floatsam, if they are getting brought inside India, they will also be liable for customs duty. So that's what they say here. Goods found at sea, including derelict, wreck, jetsam, flotsam, are treated as imports only. Duty-free admission may apply if the PO is satisfied that the goods are entitled to be duty free. Basically, if you feel that whatever that goods are there which has flown to the shore, either by way of wreck, derelict or jetsam or flotsam, but if you have proper evidence to prove to the proper officer that these goods are duty free, that means on these goods customs duty will not be payable if there is some exception or some exemption or something, whatever is there. If you are able to prove it to the satisfaction of the proper officer, then he will exempt. If there is no such exemption and all, then even these four things also will be liable for customs duty like any other imports. Understood? So these are the few cases. We have covered three sections. Section number 19, when articles with the different rates are imported. Then we have seen re-importation of the goods which are exported previously, and duty on derelict, wreck, jetsam and flotsam. Understood? Clear and comfortable? So going further with the discussion, now we are going to see four cases where there will be no duty. Now we are going to see four cases where there will be no duty. One is section number 13. In case of pilfered goods, there will be no duty. Then we have something called reduced duty on damaged goods. Then we have 23 subsection 1, which is talking about remission of duty on completely destroyed goods and relinquishment of title on the goods. So four cases are there where there will be no customs duty. So what are they? Case number 1, pilfered goods. Case number 2, reduced duty on damaged goods. Number 3, remission of duty on destroyed goods. And number 4, relinquishment of title on the goods. So let us try to understand each case. First, we will talk about pilfered goods. Sir, what do you mean by pilfered goods? Pilfered goods means pilferage means what? Petty theft. Small theft is there. Say for example, you imported some 1 lakh quantity of the goods. They are unloaded at the customs warehouse. At the customs station, they are unloaded. Before they are cleared for home consumption or before they are moved for warehousing, goods are just unloaded. Say for example, so here port is there. So there is a vessel which contains some 1 lakh quantity of the goods, and these were unloaded. All these things are unloaded at this port before they could get cleared for home consumption, and even before they are cleared for warehousing. Even warehousing is also not done. Even they are not cleared for home consumption. Just they are unloaded and lying at the customs port. So at this point of time, say for example, some 50 quantity was stolen. Some theft has happened, or some reason other than mistake of any importer or his agent or his employee. There is no mistake from importer. There is no mistake from agent. There is no mistake from his employee. So because of no mistake from the importer, 50 quantity was missing. Now you tell me, will this 50 be cleared for home consumption? No. If 50 quantity was missing, how much quantity will be cleared for home consumption? 9,99,950 quantity, 99,950 only will be cleared for home consumption. So on what amount he will be required to pay on what amount he will be required to pay the customs duty? He will be required to pay only on 99,950 quantity. On that 50 quantity which has been pilfered, which has been stolen, on that you are not required to pay any customs duty. Later, if the customs authorities find that 50 quantity, customs authorities find that 50 quantity and they have restored to the importer, they are giving it back to the importer. Now he will clear that extra 50 quantity for home consumption. No. So then he will be liable to pay customs duty on that 50. If it is not restored, if it is pilfered, if the petty theft has happened, and if it is not getting restored, if it is not found out, and if it is not given back to the importer, then there is no liability on the importer to pay that customs duty. So this is what section number 13 says. So what does section number 13 says? No duty on pilfered goods. So what do they say here? Customs duty is not leviable on pilfered goods under following conditions. What are they? Goods are imported. Goods must have been imported, and after importing they have been pilfered. And pilferage should occur after unloading, after the goods are unloaded, but before clearance by the proper officer, either for home consumption or for warehouse deposit. The goods are just unloaded. They are neither cleared for home consumption, they are neither cleared for warehousing also. Then, and pilfered goods are not restored. Whatever goods which are stolen, those are not restored. See, pilferage means a small theft, guys, not complete theft. If entire 1 lakh quantity has been stolen, that is altogether different case. That we will cover it under section number 23 subsection 1. Section number 13 only talks about pilferage. Pilferage means petty theft, small theft. Okay, so three conditions where duty will not be levied, where goods must have been imported, after that pilferage should have taken place. and after unloading but before clearance by the proper officer either for home consumption or for warehouse deposit, and pilfered goods are not restored, they are not given back to the importer, then the importer is not liable to pay duty on that pilfered goods. What do you mean by pilfer? Pilfer refers to petty theft or stealing of small items and does not include total destruction or complete loss. If the goods are completely stolen or completely destroyed, that will get covered under 23 subsection 1. That will not get covered under section number 13. Liability if restored. If the pilfered goods are restored to the importer, if they are found and given back to the importer, then they will be liable to pay the duty. So what is the principle lying behind it? The principle behind this provision is if the goods are not under importer's control, they are not liable to duty. That is a simple logic. So what are the situations which are not covered by section number 13? When section number 13 will not become applicable? Number one, goods are completely lost or stolen. Lost or destroyed. When the goods are completely lost or destroyed, as I have told that we will cover it in 23 subsection 1. Section number 13 only talks about small thefts. Next, goods pilfered before unloading. Even before unloading, that means when the goods are in a vessel, when the goods are in an aircraft, even before unloading only if the pilferage happened, then also section number 13 will not become applicable. Goods pilfered after clearance order for home consumption or deposit in a warehouse. In case if the petty theft is happening after they are cleared for home consumption or after they are cleared for warehousing, then also section number 13 will not become applicable. So section number 13 will become applicable only the pilferage should have taken place after unloading and before clearance for home consumption or even before clearance for warehousing. Then only pilferage should have happened, then only section 13 will become applicable. And they say one more line here, section 13 will not become applicable when section 23 subsection 1 does apply. So what do you mean? Section 13 is applicable when section number 23 subsection 1 does not apply. Sir, what is section number 23 subsection 1? When the goods are completely lost or completely destroyed, then 23 subsection 1 will become applicable. Then section 13 has no role to play. But what is the section 23 subsection 1? We are going to see it shortly. Just you have to keep this in mind. Either section 13 will become applicable or section 23 subsection 1 will become applicable, not both. Now, so if you come to 22, section number 22. So what does 22 say? What does section number 22 say? Abatement. Abatement means reduction. Reduction of duty on damaged or deteriorated goods. Sir, which means what? Say for example, some vessel is there. This vessel containing the goods has reached the customs station. But what happened is, say for example, 1 lakh quantity of the goods have been unloaded. But these 1 lakh quantity of the goods are damaged or they are deteriorated. They are damaged or deteriorated before clearing for home consumption. They have been damaged or deteriorated. Say for example, this 1 lakh quantity, each item was 100 rupees. Total 1 crore worth of goods are imported. But because of some damage, now the value of the goods have been reduced. Obviously, when the goods are damaged, when they become inferior, value also will fall. Now the value of the goods is only 60. So you have imported 1 crore worth of goods, but now because of the damage or deterioration, it has become only 60 lakhs worth of value. Now, on what value you have to pay GST? Sorry, on what value you have to pay customs duty? Will you be liable to pay customs duty on 1 CR or will you be liable to pay customs duty on the 60 lakh rupees on the reduced value? You will be liable to pay customs duty only on 60 lakh rupees, not on 1 CR. Not on 1 CR. But what are the conditions? When your customs duty will get reduced, what conditions are required to be fulfilled under section number 22? So circumstances. Duty is reduced if the following conditions are met. What are they? Number one, goods damaged or deteriorated before or during unloading. See, in section 13 I have told pilferage. Section 13 will become applicable only when the goods are stolen after unloading. But section 22 will become applicable when the goods are damaged or destroyed either before unloading or even after unloading. Even before unloading also, if the goods are damaged or destroyed, still your duty will be reduced. But in case of section 13, in the case of pilferage, to impose section number 13, pilferage should have taken place only after unloading. But section 22 will become applicable if the goods are damaged or destroyed either before or after unloading. Or goods other than warehoused goods damaged after unloading but before examination due to an accident, not due to the importer or his employee or agent fault. Or the goods are unloaded but before they could be inspected, then only some damage has taken place. Or when also section 22 will become applicable is the goods are sent to the warehouse. The goods are sent to customs warehouse, but before clearance for home consumption, at the warehouse goods are destroyed. Then also section 22 will become applicable. Then also it will become then also the customs duty will be reduced. So there are some differences, guys. Section number 13, pilferage will become applicable only when they are stolen after unloading, but before clearance for home consumption, before clearance for warehousing. But section number 22 will become applicable if the goods are damaged or destroyed, number one, before unloading or after unloading. Even at the warehouse also, if they are damaged, they have been cleared for warehousing, at the warehouse they have been damaged or destroyed, then also you can reduce your duty. So one simple example, like the way whatever I have told one example. So you have imported 1 CR worth of value, but because of the damage and all, now the value has become only 60 lakh rupees. You will be liable to pay duty only on 60 lakh rupees. Next, methods to ascertain the value of the damaged goods. Sir, you are telling on the reduced value only I'll be liable to pay customs duty, but how to determine that value, sir? How to determine that value of the damaged goods? The value of the damaged goods will be determined by proper officer. You can't determine what is the value, what is a value for customs duty. The proper officer himself will determine. Or what else he can do is he can sell the goods at auction. In case if you say I don't want this destroyed goods, for example, goods are completely destroyed and all, goods are destroyed, or these goods are damaged or deteriorated, you told no sir, I don't want damage of goods. Now what even the proper officer can do is he can conduct an auction, he can conduct a tender, and in that auction or tender he will sell that goods. So he will determine how much value that those goods are able to fetch. Say for example, those goods are able to sold at 20 lakh rupees. These are 20 lakh rupees will be given to the importer, but they will give you only after payment of customs duty. So selling the goods at auction or tender with the owner's consent and using the sale proceeds as a value. So basically proper officer will determine how to the proper officer will determine what is the value of the damaged goods. Then they have given one difference between damage versus deterioration. Sir, what do you mean by damage? Damage refers to physical harm, making the goods unfit for their intended purpose. Damage means something has happened to your goods because of which you are not able to use it for whatever purpose you have you have the intention of using it. Deterioration refers to reduction in the quality due to natural causes. Deterioration means reduction in the quality. Some quality has reduced, but damage means that has become unfit for your intended purposes. Not so important from the examination perspective. So we have covered section number 22 also. So we covered two sections. Section number 13, which is talking about pilferage. Section number 22, abatement or reduction of duty in case of damaged or deteriorated goods. Then we are going to see 23 subsection 1, which is talking about remission of duty on destroyed goods. Goods are completely destroyed. Goods are completely destroyed or goods are completely stolen. Like as I have told, 1 lakh quantity you have imported, entire 1 lakh quantity is gone. Able to understand? Or complete 1 lakh quantity has been completely destroyed. Say for example, some fire accident has happened. So you have unloaded the goods, kept it at the warehouse or whatever it is, you kept at the customs station. There a fire accident has happened. Your complete goods are burnt. Before you could clear them for home consumption, your complete goods are burnt. Zero value they are available. So now what will happen? Now also you will not be liable to pay any customs duty because goods itself is not there. No, you're already crying because your goods are all completely lost or destroyed. Can you expect the custom authorities to come and ask the customs duty from you at that point of time? No, you will give a tight slap to that customs authorities, right? Because you're already in pain because all your goods are lost or destroyed. So that's why the government also says we don't want any customs duty in that case. Even if you have already paid that customs duty, they will give it back. So that's what they say. Circumstances if the goods are lost other than due to pilferage. If it is minor loss, minor theft and all, 13. It is not because of pilferage, completely lost or completely destroyed before clearance for home consumption. That could be at the warehouse, that could be at the customs station, wherever it is. So before you could clear them for home consumption, if the goods are lost or completely destroyed, assistant commissioner or deputy commissioner may remit the duty. If you have already paid the duty, they can give it back to you. Remission of duty applies only when there is a total loss or loss is irreversible, such as goods destroyed in a fire before clearance. For pilfered goods, section 13 applies instead. Now they are giving a few differences between section 13 and section 23 subsection 1. Section 13 is talking about pilfered goods. 23 subsection is talking about destruction or loss, complete destruction or loss. What are the differences? Meaning, pilferage means petty theft or stealing of the goods in small quantities. Then section 13 will become applicable. When 23 subsection 1 will become applicable, when there is a loss or destruction, which refers to a complete loss or loss that is forever and which can't be recovered. Duty liability. The importer is not liable to pay duty on the pilfered goods. Whatever petty thefts are there, on that you are not liable to pay customs duty. But if the goods are restored, if the goods are given back to you, if the goods are found and given back to you, then you are required to pay the customs duty. I told you this, no? But in the case of 23 subsection 1, goods are completely lost, completely destroyed. The loss is not reversible. That's what they say. The duty paid on lost or destroyed goods should be remitted to the importer. So whatever duty, whatever customs he has paid on completely lost goods or destroyed goods, that has to be given back. Time of occurrence. The goods must have been pilfered after unloading but before clearance. As I've told, it should be after unloading but before clearance. Whereas before clearance, either for home consumption or for warehousing. Whereas 23 subsection will become applicable when the goods have been lost or destroyed at any time before clearance for home consumption. Even if the loss happens at the warehouse also, 23 subsection one will become applicable. But if the goods are lost at warehouse, if the pilferage happened at warehouse, then section 13 will not become applicable. Next, warehouse goods. That is the next point. Section 13 does not apply if the goods are pilfered after warehousing, whereas 23 subsection 1 will apply even if the warehouse goods are completely lost or stolen. Burden of proof. No burden of proof is cast on the importer under section number 13. That means if there is any petty theft or something, there is no burden on you to prove that there is a pilferage and all. Whereas under section 23 subsection 1, the importer must prove to the assistant or deputy commissioner that the goods have been lost or destroyed before clearance for home consumption. Here there is a burden of proof in the case of 23 subsection 1, whereas there is no burden of proof in section number 30. Then we have one more case, 23 subsection 2. So what is this 23 subsection 2? 23 subsection 2 talks about relinquishment of the title on the goods. Relinquishment means what? Giving up. So you have ordered for the goods are received, the goods have been unloaded at the warehouse, but you don't want to clear it for home consumption. You are saying, I don't want this goods anymore. I don't want this goods. You are leaving that goods. You don't want to clear them for home consumption. You are relinquishing your right. You are giving up your right. You are giving up the possession and right of that goods. Maybe, sir, why a person will give up his right? Why he will just like that give that goods, give away that goods? Why he will not claim them? There could be multiple reasons. Might be the customer or the importer did not send the goods whatever you have asked for. Some different goods he has sent. So you are very much fed up and you told, I no longer want this goods. I am giving up this right. You told the customs authorities, you do whatever you want with this. I no longer want this goods. So whatever may be the reason. In some cases, it will happen because of some, I can't disturb the circumstances, but in some cases, depending on the facts and circumstances, sometimes importers get very much worried and they will relinquish their right. They will give up their right for the goods and they will leave it at the customs authorities. Since you are not clearing for home consumption, you are giving up the right on that goods and all. At that time also, you are not required to pay any customs duty. So that's what they say. Owner of imported goods may relinquish their title, may give up their ownership of title to the goods before the order for clearance or warehouse deposit. Even before they are going to warehouse, even before they are cleared for home consumption, you are relinquishing your right. In such cases, the owner is not liable to pay duty on these goods. Relinquishment. Sir, what do you mean by relinquishment? It means to withdraw, abandon, or surrender any right of the goods. This should be done unconditionally. Without any conditions, you are saying, I no longer want this goods, do whatever you want. You are giving it to the customs authorities. So when relinquishment can be made, option to relinquish can be exercised before the order for clearance for home consumption or warehouse deposit has been passed. That means goods are just unloaded. They are neither cleared for warehousing, they are neither cleared for home consumption. If you want to give up, at that point of time only you have to give up. So you can't say for example, you have cleared the goods for warehousing. You have submitted one bond for warehousing, you have sent the goods to the warehouse. After you have sent the goods to the warehouse, then you can't come and say, I no longer want these goods. If you want to relinquish your right, you have to do it even before clearance for home consumption or even before clearance for warehouse deposit. Exception: relinquishment is not allowed after goods involved in offences under Act or other laws. Now you can't say for example, you are a importer, you are importing drugs and all. Prohibited goods you are importing drugs. Now you are caught, you have committed an offense. Now you can't say, no, I no longer want these goods, I don't want to face any consequences. Can you say that? No. So if you have imported any goods and you have committed any offense under the Customs Act, you can't say, no, I no longer want these goods, I want to escape all the punishments and all. You can't say. If you have imported these kind of narcotics and all, then you can't relinquish. You have committed an offense, all the consequences you have to face. Then situations for relinquishment, goods. So they are giving a few examples when the goods might be relinquished. Goods not meeting the specifications. If the goods, whatever you have ordered, but whatever you have received, they are not matching the specifications, or during voyage they have been damaged, or the recipient, the importer, has breached the contract. So these are a few examples where the relinquishment of title in the goods will happen. Then we have rule number 24, which says that power to make rules for denaturing or mutilation of goods. Sir, what do you mean by this? Is this I will give you one example of alcohol. Say for example, there is one importer. This importer is importing one alcohol. See, alcohol can be used for human consumption also. Alcohol can be used for medicines also. Alcohol can be used for medical purposes also. If the alcohol gets used for human consumption, it will attract highest rate of customs duty. But if it is getting used for medicinal purposes, then it will have low rate of customs duty. Say for example, if the alcohol is for human consumption, the customs duty is 30%. If the alcohol is for medicinal purposes, the customs duty is at 10%. So there is one importer, he imported alcohol. But he can take this alcohol and use it for he can use it for human consumption also. He can go and use it for medical purposes also. But the customs authorities don't know. No, customs authorities don't know this person is importing alcohol. But will he use it for human consumption or will he use it for medicinal purposes? Customs authorities don't know. But this importer is saying to the customs authorities, sir, I am using the alcohol for medical purposes only. I will pay customs duty only at the rate of 10%. But the customs authorities are not sure whether he will take this alcohol, and he can even have an option to use it for human consumption also. He can use it for human consumption also. So he should have paid 30% of the customs duty, but instead of that, he conveyed to the customs authorities that he will use it for medicinal purposes and paid only 10% of customs duty. So now here customs authorities are worried. Now what they can do, so what they will do is, they have given a power to the customs authorities and they said, okay boss, you want to use it for medicinal purposes, let us do one thing. If you want to use it alcohol for medicinal purposes, in that you have to use some components. Like for example, you have to use something called ethanol, and you will mix some chemicals. If you so that it can become fit for medicinal purposes. So what customs authorities can do is, okay, you want to use alcohol for medical consumption, let us do one thing. So in order to use this alcohol for medical consumption, you have to mix some chemicals. Bring that chemicals. They will ask the importer to bring some chemicals. They will mix the chemicals in that alcohol so that it will become fit only for medicinal purposes. It will no longer become fit for human consumption. It will no longer, that means even after mixing that chemicals, if this person takes this alcohol after custom clearances by paying 10% of the customs duty, since the chemicals are already mixed in that alcohol, he can no longer go and use that for human consumption. He has to compulsorily use for medicinal purposes only. So this activity, whatever custom authorities have done, this we call it as mutilation or denaturing of the goods. Whatever customs authorities have done here, that we call it as what? That activity we call it as what? Denaturing or mutilation of the goods. So that's what they say. Central government can make rules to allow denaturing or mutilation of imported goods to make them unfit for certain uses. Duty is charged based on the denatured or mutilated form of the goods. Since these customs authorities have mixed the chemicals and all, they have converted this alcohol to be fit only for medical consumption, and they will collect customs duty at the rate of 10% only. Okay, right. Then section number 25, exemptions from customs duty. So sometimes what will happen is, keeping in mind the public interest, like the way in GST government has granted exemption, even the government can consider the same thing for imports also. If any essential products are getting imported, if they are very much required for public, so keeping in mind the public interest, even central government can exempt certain categories of the goods from customs duty if it is necessary in the public interest. And that exemption can be a general, by way of a general condition. Either that could be absolute, without any condition they can grant exemption, or even they can grant conditional exemption also. That means if you fulfill some conditions, then we will grant you exemption. So that we call it as conditional exemption. Sometimes they will give absolute, without any conditions. They will say this product is always exempted. So that exemption can be by way of a general notification, either absolute or a conditional, or even that exemption could be by way of a special order. In any manner they can give exemption. So exemption conditions. An exemption from duty on goods may be granted by levying duty at a different rate or method than original. However, the duty should never exceed the original duty. So what even sometimes government can do is, instead of granting whole exemption, what they can do is, say for example, one product is attracting 10% of customs duty. So what government can say is, let us do one thing, you pay only 5% of customs duty on this. You pay only 5% instead of 10%. So like that, even the government can grant exemption by giving you a concessional rate, by giving you some different method of valuation and all. And duty is not collected if it is less than 100 rupees. This is important for the MCQs and all. If after assessment, if it was determined that customs duty is less than 100 rupees in total, then they don't want to do all this miscellaneous activities. They don't want to waste that, or the government doesn't want the customs authorities to even fight for that 100 rupees also. So what the government told is, if after doing all the assessment and all, if the customs duty amount comes to less than 100 rupees, don't collect it, ignore it. You have many other important activities to take care of. Don't fight for that 100 rupees, leave it out. That's what the government has told. Then see, whatever goods you are importing, whatever goods you are exporting, if they have to attract customs duty, that rate of customs duty will actually depend on classification. You have to classify the products. That classification is nothing but HSN classification, harmonized system nomenclature, whatever we have seen in the GST. So that kind of classification we even follow it here. So first we will classify the goods into proper classification, HSN code we will identify, and according to that HSN code we will find out what is the rate of the customs duty. So same like HSN classification, whatever we have seen under GST, the same thing will get repeated here. Like if you see classification of imported or exported goods, the import and export of goods require classification to assess the duty, which may include an assessment of even nil duty also. So whether a product will attract positive rate of duty or a product is having nil duty, that all depends on the classification. The classification means categorizing the goods under specific headings or subheadings under the Customs Tariff Act. Sir, why classification of the products is very, very important? Why? Because correct classification is important for following reasons. Number one, you can determine what rate of duty has to be paid. That will depend on classification only. Determining eligibility for exemption notification, whether the product which you are importing or exporting, whether that is exempted or not. That also you can find out only when you know the classification of the product. For applicability of other duties, anti-dumping safeguard, this will sit in the next class, and even for applying any restrictions or controls. So for all these reasons, proper classification is very, very important. And scheme of classification, in the first schedule we have goods which are chargeable to import duty. Second schedule we have goods which are chargeable to excise duty, export duty. This we all know. So the goods are arranged in a fixed pattern in the tariff schedule, which with the duty rates is specified. So if you look at the first schedule includes a description of goods chargeable to import duty. It uses the HSN code as we have seen in the GST, which is developed by World Customs Organization. And there are 21 sections here, 98 chapters we have, and goods are categorized by 4-digit heading will be there, 6-digit subheading, and 8-digit tariff item. Same like GST only, guys. In the charge of GST chapter, whatever classification we have seen, the same thing they are trying to say. Similarly, second schedule will contain description of goods which are chargeable to excise duty. Understood? So this is what regarding this chapter. So basic introduction we have seen. So next we have to proceed further with what are the various types of duties we have to see it in our next session.